Start and join me in the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Good evening and welcome. This meeting's being recorded and televised by Chelmsford Telemedia. If there's anyone else who's present who's planning to record, would you please so indicate? Nobody here, thank you. Okay, the first thing is the consent agenda, which is the approval of the minutes of our last meeting, the June 11th meeting. Does anybody have any corrections or modifications?
There were a couple of other people present who are not listed,
Yeah, you know,
what it's worth.
did I mention anybody who came to speak? I think I just put Frank there because he spoke to us. Do you want to add?
No,
Glenn,
that's
you were there?
forthwith.
Just last week?
Glenn and
John?
Sam and John Harrington.
And John Harrington.
I think that was it. Yeah.
Okay. Any other modifications or corrections?
As soon as you left me out, I'll leave it.
They just have to be able to get a general sense of what occurred.
I see.
Okay, in that case, I would entertain a motion.
So moved.
A second?
Second.
Okay, thank you. All in favor?
Aye.
With corrections.
9-0.
Yes,
Yes, as
correction.
modified. That's correct.
8-0.
8-0, that's right. Okay, some old business, committee guidelines. We started to talk about this a little bit last week, but I don't think we got to a conclusion on it. I just have a couple of things I want to kind of go over as ground rules. Requests for information or for work on the part of the town employees should go through the chair. I envision that these meetings will be fairly open and freewheeling, and we'll come out with an action item list at the end of the night, just so that everybody is kind of aware of what's taking place and what we're asking for, and also to make sure there's no duplication of work. Public comments. I'm not going to ask you to not say anything at all about this committee. After all, one of our charges is to educate. And it's hard to educate without talking to people. But I'm going to have to ask you to at least be moderate in your public comments. I had a communication with the Attorney General's office today about whether or not this was a strictly advisory committee to the Board of Selectmen. If in their judgment we were, that would free us from a strict observance of the open meeting law. They do not think we can avoid the strictures of the open meeting law. So just be aware that your behavior is bound by the OML. Things like participation in conversations on Facebook and other social media is kind of a gray area. The law hasn't really caught up to it. Again, I would not get too far ahead of the discussion here. If there's a simple factual question that you can answer, I think I would encourage you all to do that. If it becomes more of a question of, what are we going to recommend, then I think that's a little bit different story, and I'll ask you to hold back a little bit until we have a chance to discuss it in these open meetings. I have a question for the committee about the best way to distribute material. I do expect that people will be doing kind of original research, putting things together. How do you want to see that material? Would you prefer to have a printed sheet? Do you want to see, if something's being generated from a spreadsheet, do you want to see the spreadsheets? Is it enough just to see a written summary of the material?
I'd like to see the spreadsheets.
Okay. And so,
I'm fine with the written material, but
okay.
Depends what it is, but yeah.
All right, well,
But if there's stuff being generated, can't it be put in an email and as an attachment?
So,
and then we can print
this-
out what we want?
Well, this is actually, We can put it in an email. The question is, how many versions of things do you want? Should we, if somebody has prepared a summary of, surrounding town statistics, would you rather have that brought forward to a meeting where we can kind of review it and get an overview of it? And if you want to go back and say to whoever generated it, look, I'd like to see a couple of other details, and have a single document that's mailed to you, or do you want to see the revisions and the drafts along the way?
Sorry.
Well, I'm assuming that the information we're requesting and ask for will be consistent from every person.
I think
So-
anything that gets generated, we're going to have to source it, right? So if
Right.
but I don't think we need to be asking the assessor's office to do every data download that's available on the DOR website. I think we can do some of that work ourselves. And so if there's something that's done kind of along those lines, my inclination is to ask people to bring it and present it here first. And assuming it's something that the committee thinks is significant or should be a part of the final report, then we'll send out a copy of the spreadsheet, the Word document, whatever, so that people can do their own checking, make sure nothing's been overlooked, make sure there's not a formula in the wrong spot, that sort of thing.
Right, I agree. I think there should be a center point, either you or the secretary, for distribution of that information that's gathered.
I had hoped that we'd be able to do it as a Dropbox or Google Drive, but again, that would run afoul of the open meeting law. There's
Okay.
concerns about that constituting deliberation from the AG's office, so I think we're going to have to be a little bit more constricted than that.
If somebody has something they want to discuss at a meeting, it would be helpful to have certainly copies available at the meeting, but if were available before the meeting, to send it out so we could take a look at it before we come into the meeting.
Okay. I think, so maybe what I'll ask then is that if you have something you think you're going to want to bring forward on a Monday, if you can get me whatever your working copy is on a Friday afternoon or Friday evening, that gives me the weekend to kind of put the package together and get it out, so it's not hitting your inboxes at 5:30 on Monday.
How do we get it to you?
Just email. Email is the best way.
Then this means we must strictly abide by the open meeting law.
I
I
think
heard you
there's-
correctly.
Yeah, we are
no
a
question.
we are a public body. Yeah, there is an exemption in the case of bodies that are constituted to deliver advice to somebody who could make a decision on their own. The example given being a superintendent appoints a search committee for a principal hiring. That decision is strictly the responsibility and purview of the superintendent. That superintendent can do whatever he or she wants to do. In a case such as that, the advisory body does not necessarily have to abide by all of the open meeting law requirements. That does not appear to be the case here, even though the decision on a classified tax rate or a split tax rate is solely the purview of the Board of Selectmen. So, yes, that was the long version. The short answer is yes, you're right.
I've only been dealing with it since it was written by the state, so I understand. One of the things my previous committees got into was people would send out information to all the members. And then they get into somebody answering it.
Right.
And that's a strict
Right,
no-no.
that serial deliberation is just as bad as
Deliberation was the key word.
yeah.
Okay.
So I think I think the way to handle that is I'll send something out over the weekend. You're all, obviously you can review it, you can think about it, but just hold comments until the next meeting. Okay, any other thoughts or questions about kind of how we're gonna do business?
One other point that Pat made last week, which I think was a really good point. Once we adjourn, discussion should stop.
Deliberation must stop.
So,
Mm-hmm. Okay. That's committee guidelines. Next thing on the agenda is a review of the mission statement. I did pass out just a minute ago to you guys, both the minutes from the 5/14 meeting of the Board of Selectmen where they made the actual motion to form the committee, and also the suggestions for discussions, or for discussion on forming a committee from the 4/23 Selectmen packet. Mary, do you want to lead this discussion?
Well, I just suggest, I mean, there's, in the selectmen's minutes and whatever they had, I guess it was Glenn, had come forth with a mission statement or objectives, whatever they wanted for this committee. I tried, this is just a draft, of trying to put that together in a mission statement, which we might want to just say, this then is our mission statement.
You've got enough over there?
I have enough over here. There's a couple more if anybody else in the audience wants a copy. Just put them on the end there if they want to get it. And it's just, it's basically what's in here. I just tried to put it together in a more succinct manner, that's all. And we can wordsmith it a little bit, or, I mean, I just think, and it took what was under objective, under mission, and, I mean, what's in 3 different sections or something and points of emphasis, I just tried to put it in one 3-paragraph statement. And decide whether you like it, whether we want to adopt it. If not, I'm open.
I just read it. I like it. Thank you.
Whether it encompasses everything you think we ought to be doing, or we ought to accomplish.
Well, I guess that's one thing, and maybe it doesn't need to be in the mission statement, but sooner rather than later, we should have some kind of outline, I think, making sure, just so that we don't overlook any points while we go through the process. Questions we want to answer or points that need particular emphasis.
I don't think that would become a part of a mission statement.
I don't think a mission statement should be instructional or in an outline format. I agree 100% with you, Mike. I like the idea of having a mission statement, brief, succinct, straight to
It
the
doesn't
point,
matter, but
and then a bulleted, itemized list of things that we want to accomplish. This says too much to me.
It says too much.
I would keep the mission statement that Selectman Diggs has put together, except changing the last sentence so it's a little clearer in where we want to go. And as we had talked about, providing, a recommendation. And again, just trying to keep it simple and move on. I think the outline we should work on immediately. But as far as the mission statement, I think we just put this to bed and move on from there. So what I would recommend in the current mission statement is the last sentence. If you're looking at the first page of the suggestions for discussion that you handed out, mission statement down below, you look at the mission statement itself, 1, 2, 3, 4, 5, 6, 7, 8, actually just the last line, where it starts off, attempt to assess such effects objectively, I would insert this, and will recommend whether or not to adopt a split property tax rate, period. End of story, move on. Let's work on bullet items, let's get some people in here to present.
My only concern with that is that it might be a little too narrow if we're going to talk about recommendations. I think we may have more, there may be more than one policy that people feel strongly about recommending. Whether or not there's a split rate, whether or not there's a residential exemption, whether or not there's a small commercial exemption. Those would be the 3 big things for me.
And we can add that. I think the real issue is, whether we're gonna go with a flat tax or a split tax, right? I mean, that's really, at the end of the day, that's what we're here for.
And about the small commercial property exemption.
Yeah, but that all falls in line, to me, into the bullet item agenda that we wanna put together and assess. My recommendation.
I look at that as it was 2 items on the ballot, the last ballot. So I think they should be taken separately.
You can't have one without the
No,
other,
can't
right?
have one.
It's,
Actually, yeah.
you-
Westford has a small commercial exemption and no split rate.
Okay, all right, well then, if that's, all right. But again, I just keep it simple and let's focus on, if you want to add that or whatever, let's just get to the board items and start working on rolling up our sleeves and getting
Should we,
people in.
okay, should we just, what about just putting a period after recommend various courses of action?
Well, I think,
Is that too vague then?
Well, I think the major issue at hand is making a recommendation. We seem to be caught up on it last time, and making a recommendation over the split tax rate, so I think we should be clear about it.
well, it does say will recommend in the original mission statement proposed.
I think the last sentence is nebulous at best.
I think it's meant to be.
Well,
I agree with
I don't think it should be.
I'm not certain it's our role to recommend one or the other. I think it's our.
I thought we had discussed
I
last
don't-
time that we wanted to make a
I don't
recommendation,
know
that we
that
would
we
change
ever-
the statement so that we would reflect that.
But when we make a recommendation, I thought we would be making a recommendation on all the different findings we have, and then the selectmen make the decision. Am I wrong?
I think you might both be right.
Yeah.
I think Tom is saying he'd like to see a vote, an up or down vote
Yeah.
on the issue of a split rate from this committee. My only reservation with that is making sure that all voices are heard. And I think if we talked a little bit about the idea of consensus, what that means. I don't want to put us in a situation where it looks like we're ignoring a point of view. So there are ways around that involve taking a vote, but I think that's something that ought to be thought about as well.
My thought is that Mary's mission statement is similar to the mission statement proposed before, but I think that we do need to take it line by line to make sure that each sentence is what we want to see in the mission. And if not, then it can possibly revert to what was proposed before initially. This is the first time that I saw it. I haven't had a chance to study and do the comparison. Maybe we don't need to do that tonight. Maybe we can take this mission statement home and do that, compare one to the other, and bring back and give our recommendations to you during the week.
Well,
Then
no,
we can-
I think I'd prefer that we just come back and discuss it.
Okay.
I don't think you need to tell me where you're at on something like that. But I suppose what would be helpful is if a couple of people wanted to write their thoughts down or second drafts, then
Yeah.
they can get distributed.
Let me just, the first paragraph here was basically what's
Right.
under the mission statement. The second paragraph,
A mission statement
what-
should be short and succinct.
I hear you, Tom.
This is a mission paragraph.
Yeah.
I'm not saying it's wrong, but
and the second paragraph, and I don't know, in what we had seen last week, or maybe all of you hadn't, there was some points of emphasis that the selectmen had talked about in their meeting, and that was basically, I included all of that in that second paragraph. And then the third paragraph was just, it's bigger print and more space. It's just a statement as to what we will recommend at the end.
But what do we want to accomplish is what the mission statement should say. It shouldn't recite all of the things we're going to be doing.
I think, to Tom's point, that second paragraph could be the basis for an outline,
Okay.
a starting point for the outline.
absolutely. I'm all for
report,
outlines.
Fine, that's-
right? And but it doesn't necessarily, maybe it's not the mission. So if we pull that out,
Pull out and use the first and
then-
last
yeah, and
last
then-
paragraphs?
is everybody okay with the first paragraph as kind of a summary?
I don't think you need the last sentence. Because I agree that mission statement should be short and sweet. Then if you want to go to objectives with a list,
And put the vote in the objectives?
that's item 2.
I'm okay with that. I just, again, just my bringing up with management and writing mission statements
Ditto.
should be just,
More than
this
2
is what-
sentences
right.
and you're not doing it.
We're missing the point here, and we're spending too much time on it, quite frankly. There's nothing wrong with what Mr. Diggs wrote. I think just if we're gonna, the last sentence I didn't like.
Well, there is a difference between the first one that Mr. Diggs wrote and the second one that Mary wrote, and that is the word recommendation. So that is definitely a discrepancy, so I think that's one thing we need to decide.
Mr. Chairman,
Yes.
at least for me as one member, I think it'd be helpful to hear from the appointing authority. Mr. Diggs is in the audience today, and I know that you seem to be stumbling on whether we want to give a recommendation or not. I recall that there was some discussion at the last meeting that the selectmen talked about a recommendation or no recommendation. For me, the important part of a committee is that we meet expectations. I'm not really interested in going beyond expectations as one committee member. So I'd like to hear from the appointing authority directly.
Is everybody okay with that?
Sure.
Yes,
Mr. Diggs?
no problem.
Glenn Diggs, Board of Selectmen. I was here last week when there was some initial discussion on this. Let me first say that the document that was prepared and presented to the Board of Selectmen as some idea of what the committee should be doing was really just an abstract document. It wasn't meant to be the letter of the law. It was meant to be something that would let people know if they wanted to sign up to join this committee, kind of what they would be doing. It was very specific in terms of just before the mission statement, it said this is a suggestion, but that it should be modified as seen fit by whoever is on the committee. And that was the intent of that. That, it could be X long or Y long, it didn't matter to me, just that everyone understood exactly what they were getting into. There is a question of what you should recommend, what you shouldn't recommend. The feeling in general was that I, as one of the writers, was perceived as in favor of a split tax rate. And the Board of Selectmen wanted this committee formed with the idea that although people might have some preconceived position on it, that everyone would be totally open-minded and listen to each other and come up with some sort of consensus at the end that was uniform based on the facts that were found. As such, we didn't want to put any words in anyone's mouth ahead of time. And that's why you get this conflicting part, because it was meant to be nebulous, that you are will become the experts on this, more so than the Board of Selectmen. Although we will be following it and we have our ideas and we do reach out to people. This hasn't been studied by the town since 2005. One of the things in there, and I saw part of it in the Mary's suggestion of redoing it. One of the things that wasn't mentioned in there is that there are 9 categories of various relief for various groups, if you qualify for those groups. And as to what they meant in 2004 when Chapter 3 was enacted, and what it means today to an average taxpayer in Chelmsford. I think that's important because you may find in the end that there are a number of these still available. They are a very significant amount of money, and therefore perhaps you don't need to use something as severe as a split tax rate, but more of an education process so that people understand what they're available for and that it will satisfy a lot of needs. You may find that that is not enough based on the average tax rate in Chelmsford in 2018. But again, it was meant to be nebulous, and as you pointed out, it does seem to be that way, and it was done that way on purpose because you are going to determine what that is. And you're right, in terms of a mission statement should be fairly concise, not too wordy, and give you plenty of leeway to go in this direction or that direction based on the information and based on the source information that you find. So you're absolutely right in that regard. We hope that you look at all of those avenues. You also look at it, Mary had in hers, that other towns that have adopted a split rate, what kind of split rate did they start with, to get some idea of that. So you are touching on all the important points, but again, it wasn't designed to be a dictatorial type of document that you could not modify based on what you feel is the best thing to do. Anyone have any questions? Okay.
So maybe it'd be
Thank you.
simple
All right,
enough
thank
to
you.
have the first sentence of what I have in the last sentence. Because what I didn't address in what I'm saying, and Glenn was talking about, and I thought about this afterward, are all those possible individual exemptions.
Right.
And that's not addressed in this at all. So what we're
No,
looking
but-
at are options available for tax relief. There are lots of them. There are
Okay.
split tax rate, there's residential, commercial exemptions, individual exemptions. If we want to look at all of them, then it's a simple enough
And we
statement.
put a recommendation together based on what we find.
And put a, right.
Right, and that's what it says, yeah.
That's 2 sentences, not 3 paragraphs.
That's basically what I'm saying, is the first sentence of what I have here and the last sentence of what I have here. Now wordsmith the last sentence, because some of you don't like the
The
last
last sentence
sentence.
in the 3rd paragraph.
Yes. And that's word for word what Glenn had in what we
Oh.
looked at last week, so.
Right, so, well, again, so what I had done was I'd used the first line there. The committee will attempt to assess such effects objectively and will recommend whether or not to, whatever we want to say, to make recommendations as deemed appropriate
And we'll recommend,
to the Board of Directors. Board of Selectmen.
Eliminating the phrase "and insofar as
Insofar
possible,"
as
which I
possible.
think has value. I think that phrase has value. Because I think we've just heard reiterated that this board can make a number of different recommendations, and we may come to a strong consensus on a number of different recommendations, and in any one particular recommendation, we may not have a consensus on.
So we'd report that out as just something that we didn't come to a consensus on, or that there are the different points of view are irreconcilable.
I like 2 sentences.
okay. Not objective.
Ditto.
So my question is, if we had 2 sentences, is there anything that's left out?
We're gonna look at,
Well, again, I think what gets left out, we start another document.
Correct.
So do we ignore an objective?
no, we're not.
We're gonna
that's
have a
why
separate objectives.
Yeah.
That's why
outline.
I did this, because we weren't looking at objectives and mission statement,
Right,
whatever.
right.
I tried to put it all in one, basically, I took what was in objectives, points of emphasis, and mission, and tried to put it all in one document. Now we're down to the first and the last sentence,
Why
and
wouldn't
I'm
you,
fine with that.
why wouldn't we just use the last sentence?
Pardon?
Why would we not just use the last sentence instead of the committee, have the tax classification
Well,
study committee?
I think you ought to have a purpose for what, statement of purpose.
Well, the purpose will be to attempt to assess.
We could review as well, review and assess.
It's very general. It probably should be general because we can make it very specific where we want to.
The more general it is, the more leeway you have.
So I would agree that the second paragraph
Go.
be
Gone.
struck.
And the last 2 sentences of the
The
first,
first.
current
Okay.
first paragraph struck. We're having as our mission
Exactly.
statement now.
I'd agree
let's-
with that.
Our mission statement now is the first sentence on this document that I put together and the last sentence on the document I put together.
So could somebody read it for the,
Purpose of the
People in the town?
Tax Classification Study Committee will be to review the options available to relieve local real estate tax burden on the residents of Chelmsford. The committee will attempt to assess
Thanks.
effects, maybe I ought to put, maybe the word ought to be options, such options objectively and insofar as possible will recommend various courses of action for the Board of Selectmen to consider when deciding whether to adopt a uniform or split tax rate or any other measure for tax relief.
I'm wondering if we could change insofar to if, or does that give it another meaning?
Well, it's
Just
spelled
shortens
wrong.
it. Now, we're not talking about the small business exemption
You're
here.
talking about
No,
everything in
Everything?
here.
Right, I think Mary's idea of keeping it as general as possible does give us a lot of room to work with, and we'll start to outline the objectives.
So I'm going to move that we accept the mission statement as I just read it.
So, just getting back to your point, we don't need insofar as in that sentence.
John
think we
liked
do.
it.
Well,
do
the
too.
committee will attempt to assess such effects objectively and will recommend various courses of action for the Board of Selectmen.
Well, if possible. It might not be possible. I like that.
I changed the word affects options to correspond with what's in the first sentence.
Okay?
We're going to study options for tax relief, we'll assess these options and recommend.
So we're not saying anything about businesses in these two sentences. Is that,
We're looking,
We're not saying anything about residents either, are we?
Well, we are in the first.
I did in the
Sentence.
first, it
Yeah,
really,
but I mean, in terms of an exemption.
I'm not saying anything.
Yeah, I think that's appropriate. That's what I'm saying. And if we're going to start listing something like the commercial exemption, then we also have to list the
Yeah.
residential exemption.
Well, in the first sentence, it says residents of Chelmsford is the way it ends it, on the residents of,
I understand, but
Well-
I'm saying if we mention specific exemptions, then we're kind of,
All
we
right,
have to list others.
so I have a motion.
Second.
All right, let me review the motion that takes the first sentence of the mission statement and reads, "The committee will attempt to assess such options objectively and insofar as possible will recommend various courses of action."
I would like,
There's a motion on the floor. Are there any amendments?
yes. After the first sentence, after residents, I'd like to include and. Is it, yeah.
You're gonna have to change the whole sentence, because you're
No.
talking about relieve the local
Commercial
state tax
property
burden
owners.
on residents.
that's what I was saying.
And commercial property owners of Chelmsford.
Is there a
But
second
if you
for
take
the-
that whole thing out.
Is
and
there,
just-
is there a second for the motion?
Okay. I disagree. I don't understand why you
can
don't want to
second
have that in
it,
there.
and if you second it, then we can have discussion.
Oh, I second it.
All right,
I-
any discussion on the?
I would just like to say this, the mission statement is something that we want to be, right? So if you think in terms of what we want to be, are we saying that here?
Well, we want to take the residents plus the commercial.
Why aren't you just saying the purpose of the Tax Classification Study Committee will attempt to assess such options objectively and insofar as possible, and with that whole last sentence, because then you're including anything and everything that we come across in the time we have, is my thought. And I could be wrong, but that's what I'm thinking.
Well, then, what about if we put the period after tax burden, and then you won't have to,
Yeah, that's where I was, tax burden in Chelmsford.
and then that takes everything into consideration, because you're not mentioning either residences
Okay.
or commercial.
I like that.
Okay, take out on the, I'm okay with that. I have a motion to approve it.
Yeah.
I'll
A motion-
accept as a friendly amendment the change,
Okay, thank
to
you.
change the first sentence to say to relieve the real estate tax burden in Chelmsford.
That's the first sentence. And the second
That's the first
sentence,
sentence.
we're changing to what now?
Committee will attempt to assess such, because I talk about,
Yeah.
we're reviewing
Yeah,
options.
I
The
get that.
second sentence will say, the committee will attempt to assess such options objectively and insofar as possible recommend of the rest of it, the various courses of action for the Board of Selectmen to consider when deciding whether to adopt a uniform or split tax rate or any other measures for tax relief.
So, my only concern really with that sentence, and I hate to belabor this, but we're already a uniform tax rate. So I don't know why we're asking or saying we want to adopt a uniform tax rate. The question is, do we want to adopt a split property tax rate?
Or we could just say to change the existing tax.
And say to consider
Well-
whether deciding, when deciding whether or whether to, I don't like the way that sounds. Never
You
mind.
know, I would actually suggest that, that this is an evergreen decision, that every year the Board of Selectmen decides whether they'll adopt a uniform rate or a split rate. It's, what's been decided in FY '16 or FY '17 has no bearing on their next decision. Nothing constrains them. And I think it might be valuable to lay out the sorts of things we think that the Board of Selectmen should review each and every year when they make this decision.
As part of our recommendation at the end.
I think, I would hope that this becomes a roadmap.
I'm not presupposing that the possibility of recommending we stay with even of a uniform tax rate is a possible conclusion when we're all said and done.
Yeah, we're not
I
making
don't
that
think any of
determination.
us should come in with any predisposition as to what we'll recommend, what we are likely to
Right.
recommend.
I like that last sentence, the way it is,
Any other motions?
I mean, with the options change.
Any other discussion? All in favor of accepting the mission statement as amended?
Could we read it once more, please?
Purpose of the Tax Classification Study Committee will be to review options available to relieve local real estate tax burden in Chelmsford. The committee will attempt to assess such options objectively and insofar as possible, recommend various courses of action for the Board of Selectmen to consider when deciding whether to adopt a uniform or split tax rate or any other measures of tax relief.
Like to second that?
We've got it.
So I got it.
So all in favor?
Aye.
Aye.
Any against? Abstentions? 8-0. All right. I also have I have on the agenda a discussion of upcoming meeting dates. So, as we discussed a little bit last time, the selectmen are not going to be meeting twice a month during the summer, so there are a couple of extra Mondays open. That's the good news. The bad news is Monday actually turns out to be a really bad day to have committee meetings once it turns to fall. So right now, the dates that this room is available: July 2nd, July 9th, July 16th, July 30th, August 6th, August 20, August 27. Then we get into trouble. September 3rd, the next available Monday is Labor Day. There will be no meeting then. September 17th is available. October 8th is the next available Monday after that. That's Columbus Day. There will be no meeting then. October 15th, which is the first night of fall town meeting. We can't have a meeting while town meeting's ongoing, in part because we lose a bunch of people. We could conceivably have a brief meeting before town meeting starts at the senior center, but those are typically only useful if you have something you need to approve right before town meeting. And then October 22nd, the remaining Monday, is the potential third night of fall town meeting, depending on how long it goes. That takes us to November, with really only one meeting in September or October, maybe two meetings in September and October. I'm concerned that that may not be enough as we get to crunch time. So I would say now is probably as good a time as any to do it. Is there another day that works for this committee's meetings?
Tuesdays work for me.
Tuesday worked for me.
Sheila, you're bad on Thursdays, right? As we
No, I'm
head
fine
into-
now.
Okay.
Thank you, though.
I'm bad one Thursday a month, I would be bad.
I
Depends
can't
on
do
what it is.
Wednesdays or Thursdays.
Okay.
Thursday's not good for me.
And I assume nobody wants to spend their Friday evenings here. What do you want to do? I guess the other question is, are people going to be around on the 2nd, which kind of kicks off the 4th of July week? If we're not going to have a quorum, there's no point in having a meeting. Even if we're going to be significantly shorthanded, I'm not inclined to make it difficult for people.
Yeah, I'm not going to be here on the 2nd.
I won't be here on the 9th and the 16th.
I won't be here on the 9th.
Huh, okay. Evan?
I'm here all those days.
Okay. Dan? You're...
Like I said, 168 hours a week, not a problem.
Okay.
I'm fine with all these dates.
Are you here, you're taking off that whole week from 9th to the 16th?
Vacation.
You can go.
I mean, I think
Yeah.
editorially, I think we're not going to find,
There's not going to be a perfect day.
particularly during the summer,
Um,
and maybe moving forward, it's key
Yeah,
for...
so what do you think? If I go ahead and book this room for the 2nd, And we can have a further discussion there about if we want to switch to Tuesdays through the rest of the summer, or if we want to stay on Mondays during the summer and switch to Tuesdays once we get to September. I can go either way on that. It might be easier to just do it and be done with it than, people know to block their Tuesdays. But we don't have to make that decision tonight.
This building, there are no other boards meeting on Tuesday nights in this building,
We would have to check.
Doing the school committee.
right?
Right,
School
that's true.
committee-
It's school committee Tuesday
committee
night,
meets,
so.
But they don't meet in this building. Now, if,
It's televised.
then there's a problem with television, but that's,
All right, so I'll have to check.
and what,
It was recorded for.
Wednesdays are planning boards?
Yeah.
Is that right?
Yep.
Wednesday, they meet every other week,
Second and fourth.
second and fourth, so, okay.
All right, well, I'll look into what the television situation is, and we'll go from there, but I'll go ahead and schedule July 2nd as our next meeting.
Okay.
Okay. That brings us to new business. The first item under new business is a presentation from the assessor. Frank, you want to come up? And I think you're just going to review what's in the
Exactly right.
in the booklet. Okay.
Are we allowed to ask questions during the presentation?
No.
No? Okay.
Yes, of course.
Start check.
Would you prefer if we held the questions till the end?
Probably best, then, if that's okay.
Okay, yeah.
Thank you very much for having me. I'll go over the background of the implementation of tax classification. Sam was good enough to kind of summarize nicely here. It really starts off in 78. The Constitution amended allowing municipalities to classify real property in several classes that we're familiar with: residential, commercial, industrial, open space. They also required communities to be assessed at full and fair cash value. That's something that remains in place today, obviously. The legislature adopts tax classification to allow cities and towns to manage the levy share between residential and CIP, which we'll get into in greater depth as we move through this. It is establishing split rates. The law does not restrict municipalities to the original intent. In 1980, the infamous Prop 2.5 was passed as law, required to tax at full and fair cash value, which resulted in a tax shift from the CIP to the residential property class. Prior to the 78 residential property class assessments were generally significantly below, while commercial property assessments were tended to reflect market values. The DOR report kind of showed that to reduce the tax burden on residential taxpayers by shifting some of the tax burden to commercial industrial properties. They also showed to address commercial industrial properties' adverse impact, if any, on municipal services, to ensure that the proportional shares of the contribution to the tax levy remain constant over time. They also make several summary things here that I can identify a few of them. Tax classification as a municipally managed policy is firmly entrenched in Massachusetts. Very few municipalities adopt classification for its original and legislative intent. Adopting classification to address an identified perceived negative impact on municipal services. Most municipalities adopt classification for politically expedient outcomes. Authorizing ever-increasing shifts to the commercial industrial property classes is not good public policy. Though not the primary factor when businesses make locational decisions, higher commercial industrial taxes also serve as an impediment to attracting and retaining businesses in certain communities. And again, this was a summary opinion from the Department of Revenue. This kind of starts my part of the whole process. The tax rate setting process. Each September, October, I submit data to the Department of Revenue, which includes all sales greater than $1,000. What it also includes is my analysis that I've conducted on all the sales. They then duplicate that to make sure that it conforms to their guidelines. They also review my notification of new growth. and do an analysis on that. After a couple of weeks, they then grant certification on all of this. And what that is basically saying that I've assessed all the values in town at full and fair cash value. With that in hand, I'm allowed and have to go before the Board of Selectmen where they can review this and vote on a number of different items, including splitting the tax rate. And the splitting the tax rate shifts by the adopted percentage the burden taxes borne by the residential to the CIP. Every taxpayer in the town is, of course, affected by this. The small commercial exemption, adopting a SCE, shifts the tax burden by the adopted percentage not to exceed 10% from eligible commercial parcels to non-eligible commercial parcels in all industrial. Residential and personal property are unaffected by this. To qualify for that particular exemption, a commercial parcel must be valued no more than $1 million and have 10 or fewer full-time employees. And once again, I'll get into much greater depth in a moment. The residential exemption shifts the tax burden by the adopted percentage up to 35% away from lower value properties to higher value properties in non-residents. The shift is only within the residential class. CIP is unaffected by this. To be an eligible residential parcel, principal residence as a taxpayer as of January 1st. Off on the right is kind of the simple calculation of the tax rate. How much the levy is for residential, say it's $80 million, divided by the appropriate valuation for all residential, gives us a $17.96 tax rate. And with a unified tax rate, it's the same all the way down through here. This page here also shows basically one of the pages that's generated by the department here is a summation of the things that myself and the finance department have entered. Shifting the tax burden. What we're allowed to do here in Chelmsford and many other communities is shift the tax burden for the CIP up to 50%. Once that's voted on by the selectmen, it of course is put onto the recap sheet and ultimately turns into a tax rate. When calculating the tax rate, we simply take the CIP, what I've used here is a percentage is 30. So we've got 18.34% is our CIP valuation with a single tax rate, a unified tax rate, or unified values. Multiplied by 30% shifts it to 23.84, which we subtract from 100 to give us the balance, which is residential. So there would be 23.84% for the CIP, 76 for residential. In this column here down the bottom here, and I've done the same kind of work, but what I've tried to show here is on the left-hand side is the levy. That is the amount that is going to be contributed by each of the classes. So the residential in a 30% shift would capture roughly 76% of the taxes, while their valuation equates to 81.66 on the far right. So you can see the residential is dropping by a couple of percent. The CIP is going up by that adopted percentage, in this case, 30%. The chart on the upper right takes that same kind of information and applies it to various assessed values. The $200,000 one roughly equates to a typical condominium. The $400,000 approximates the average single-family property here in town. The $600,000 residential is a somewhat larger, more expansive colonial or newer home. The $1 million and then the 1.75 is the average value for the commercial and industrial. And you can see the impact on them as we go from 1% up to 50%. Of course, the residential begins to drop and the CIP ones begin to increase. This is also shown in the bar graph below, using a couple different assessments, $400,000 and $1 million. And you can kind of see that the residential is kind of falling off a little bit while the CIP increases. This is a historical levy and value share that the selectmen have asked me to produce each year, going back initially back to the 80s, but we've cut it back to 2006 through 18. And it shows a couple different things. It shows the value shift, the levy share, but also the high to low ranking, which is generated by the Department of Revenues. You can see back in 06, we were roughly 63rd. It was to say they were 62 higher than us. And it has the average bill as well. increasing. I didn't have the data for 18 at the time of this, but I think it's around 70 now. And that's the average tax bill at 7175 based on a $399,500 valuation. Bar graph below isn't as illustrative as I had hoped. It just kind of shows the levy increasing from 2014 to 2018. By the looks of this graph, it's kind of uniform, but there are some fluctuations, which you can see in the numbers above. Below is Sam did this on the far right. It showed a breakout, particularly of the residential class. We say residential class, but within the residential class, because we have single families, condominiums, multifamilies, mixed use. And Sam broke them out because we were trying to track, if we say residential's increased by 7 or 8%, well, that could be concentrated in condominiums, for example, or single families for that matter. This is a way of looking at it from one year to the next to see if there was anything kind of disproportionate within the residential class. In this case, it was relatively uniform. Statistics for various communities. Glenn actually asked that I do this last year, and it's an interesting spreadsheet. And this is the one Helen referenced last week, which has Chelmsford in the middle and going around them a butter to a butter, moving out several circles. And what he asked me to incorporate was the split rates for those various communities and the excess levy capacity, which is to the far right in this column. The split shifts are kind of self-explanatory. The excess levy capacity is the amount that depends on which community we're speaking about. But Chelmsford, you'll see, for instance, it's 465, almost 466,000. These are FY17 values, by the way. At the time that I generated this, there were no 18 values available, so for comparison purposes, I went back 1 year. You'll recall that we voted in at town meeting to go approximately $500,000, in effect lowering the tax rate and giving it back to the residents. That's what that 465 represents. In a typical year, for instance, this past year for Chelmsford, it was, I think, about $32,000. It's basically the difference between a penny and the tax rate. So when we calculate the tax rate, we take the amount that we can absolutely raise as the highest, divided by the full and fair cash value. So for 18, it might have come out to 17,9632. We can't have a tax rate 4 places to the right. We eliminate that, round down, so there's always going to be a differential. However, for these other communities, you can kind of easily identify where that's not the case. Billerica, Lowell, that's just frankly a matter of policy. Some of these other communities, so anything above $100,000 is probably something that they adopted. On the far right is, I think Glenn asked me to produce this as well. This is all the shifts that we would do. So if we go from 1 all the way down to 150%, you look across over with a single tax rate, it's a residential factor of 1. That's a phrase you continually hear, is the residential factor. For example, if you look at 115, 115 is going to the far right, the residential factor, 0.9663. That is to say, with a 115 split, the residential would be paying roughly 0.97% of what they would without this factor being in place. Conversely, the commercial industrial will be paying 15% more. Same thing as go down to 120 to get roughly a 4.5% savings on the residential. The commercial industrial would pick up the 20%. Small commercial exemption, that, as you say, was discussed here a few minutes ago. It's one of the things that one of the 3 or 4 things that the Board of Selectmen will review each year. With a vote by the Selectmen, an exemption of up to 10% may apply to Class 3, which is limited to commercial. They would have to have occupied the property as of January 1st and have an annual average employee of no more than 10 and have a valuation of less than $1 million. The Department of Unemployment Assistance gives me much of that information to establish what businesses here are have 10 or fewer employees. Of course, have access to what's less than $1 million, and I just simply correlate, reconcile the two. When I did this that past year, we had roughly 114 that I could easily identify that would qualify. The small commercial parcel does not have to be owned by the occupying business. In other words, if a building has 3 or 4 tenants, none of which own the building, they still could potentially get the exemption. The exemption is granted to the landlord or the property owner and may or may not be passed on to the qualifying tenants. Once again, it has to have a valuation of less than $1 million before the application of any small commercial exemption. In fiscal 18, there were 454 commercial properties, not just industrial, but 454 commercial properties, out of which 368 were assessed for less than $1 million. That's 81%. According to the list provided by the Department of Unemployment Assistance, identified, as I say, 114 parcels that clearly would have qualified for the exemption. It's my belief that that number would increase dramatically. Once I begin to develop the list a little bit more comprehensively, people begin to make me aware of the fact that some buildings don't have the employees that just weren't on this particular list. I could easily see, looking at it, that certain commercial condominium complexes, there weren't nearly as many coming out of there as I had thought, and I know that they probably have 10 or fewer employees. So I'm inclined to think that more would qualify than 114 that I can confidently say already do. Once again, this is passed on to non-qualifying commercials and all industrial properties. Residential parcels and personal property are unaffected by this exemption. The way it's calculated, we identify the percentage. In this case, I think I sent a spreadsheet, I don't know if I hope it made it to everybody. It was sort of interactive. You could plug in a few different numbers there, and it would kind of carry forward. In this case, I used 10%. I said 10% being the maximum. And it's simply calculated by taking the CIP, subtracting the property, and then the qualifying parcels, generating a tax rate, and then applying it to the qualifying parcels with one caveat. When you look down the bottom, if you look at the eligible parcels, say $450,000, whatever the adopted percentage is, I subtract that percentage, in this case $45,000, leaving us a balance of $405 times the appropriate tax rate, which gives me the assessment or the tax amount at $8,700. You can see that same parcel as you slide across what the implication would be. An eligible parcel would be $8,700, and it's $9,700 for a non-qualifying. The residential exemption. This is one of the things, as well as the personal exemption, that does apply specifically to residential. The selectmen vote on whether to grant a residential exemption to all Class 1 residential properties that are the principal address of the taxpayer as of January 1. It can't relate to residual land or land that doesn't contribute to the value. This excludes where Clause 18s are in effect, which are a hardship clause. To calculate the exemption, the assessors first determine the average assessed value of all residential parcels. For fiscal 18, that was $352,000. That's different than the $399,500 you may have seen quoted as the average assessed for single family. For this, I average all residential parcels, larger apartment buildings, vacant pieces of land, and the like. Adopting the residential exemption increases the residential tax rate. The total amount of the tax levy paid by the residential class remains the same. However, because of the exempted valuation, the levy is distributed over less assessed value, driving the tax rate up. The higher rate creates a shift within the residential class that reduces the taxes paid by homeowners with moderately valued properties. Those taxes are then paid by owners of rental properties, vacation homes, and higher valued properties. This particular exemption is most often found in seasonal communities, Barnstable, Big Tisbury, many Cape Towns. It's also found in properties or communities that have high rental stock. Malden, Somerville, Cambridge, Boston, some of them. It would show on the taxpayer's bill. They can apply for it just like they would other exemptions. This other spreadsheet here, I shamelessly copied from the Department of Revenue and applied it to Chelmsford. There are several assumptions here. I have to kind of assume of the single-family class how many are owner-occupied. I assume 95%. The rest seem to make some sense. For the purpose of this, I use 15% as an exemption amount, and you can see down the bottom the impact of that. For a $330,000 property, their value, their taxes would not increase, would go down by $120. Conversely, the $430 would go up by $178. I do want to say that when I developed this is inclusive of the 2.5% increase that we already incorporated. So if the average bill went up $250 this year, It would, in the case of the $330,000 home, it would have been lowered by 120. Still realizing an increase, but not as much as they would have without the exemption. These others, I kind of see this whole committee as kind of two phases. One of them is what we discussed here and spent some time talking about these these exemptions here as it relates to property tax policy. The rest of them are personal exemptions, which clearly, the selectmen want me to touch on, or want the committee to touch on. I can get into that now, or wait till you're kind of moving towards that phase, because there's a lot of information with that as well. Or we can double back. I'm sure there's a lot of questions with.
Why don't we start with questions on what you've done so far, and we'll see where that goes.
Couple questions for you. I have skimmed through the 2004 DOR report, and actually in your summary here, it doesn't seem that the DOR was in favor of any kind of tax classification at the time of that report.
I would say they recognized it as a political instrument. They recognized it as, his intent from the beginning is to, once in '78, when it became full and fair cash value, and much more had to be submitted into the Department of Revenue from my office and all offices, what they found was the commercial industrial were probably valued much closer to market value than were residential. I can remember being an appraiser at the time and seeing residential values off by 50%. I think, so the intent of it was, well, okay, in one fell swoop, we value everything at 100%, full and fair cash value. There's going to be a natural and dramatic shift towards the residential. The intent of the split rate was to stabilize that. Probably saw it as a phasing out over time type of thing. The phasing out never became realized, that's my guess, and became a political, the tool that it now is.
So when commercial and residential valuations are current, like they are today, then the system doesn't work or isn't recommended by the DOR?
I haven't heard them say that exactly. They did say that it's fraught with some peril. Even brings up constitutional issues, which I don't think have been pursued, but I've heard rumblings of that as well. I think the DOR takes wants to keep an arm's length distance from tax classification in terms of coming out with opinions and that sort of thing.
Just one other question on the small business exemption. This, to me, is confuses the heck out of me, because you've got the number of employees in a business being less than 10, and then you have the valuation of the property itself having to be under $1 million. So I'll just use that as an example. You look at Summer Street, the shopping plaza there. That property is well over $1 million. So even though all those little businesses in there, probably most of them don't have 10 employees, they don't qualify for that exemption.
They're out.
So is this the exemption rules for the small business that are in place now, are they unrealistic? I mean,
It's a good point. $1 million back in the day was $1 million, and that's why I kind of brought on that stat of showing how many commercial properties are less than $1 million. Quite a few now. That number hasn't changed that I'm aware of, the $1 million, or the 10 employees for that matter. They also make another restriction, using your same scenario. Let's say Summer Street was less than $1 million, and there are 20 suites there, 19 of which have 10 or few employees, and one of them has 11. It's out. The other thing that's worth mentioning about the small commercial, I think is fairly powerful. It goes, once again, to the property owner. The property owner is not compelled to pass that along in terms of concessions to the tenants.
Did you say, I'm sorry, did you say that they do pass it along?
They're not. The exemption goes to the property owner.
in the 114 properties that you've identified as small businesses, do they tend to be owner occupied, or are they rental units, or do you have a?
They look to be owner occupied.
So a small building with a hair salon or something like that.
That's
would
right.
be-
That's right. And when I looked at them, I knew that there had to be there were more than 114, I know there are. But I would have to have made guesswork, educated guesswork as to what those units, we're talking about condominiums almost always, what I'm
Right.
thinking about. But I knew the 114 is something I could hang my hat on because they were included in the list. It's a list that would be developing over time, over years. Anybody I've talked to with the small commercial, particularly Westwood, took them a while to get that list together.
How many parcels in total? Do you have that information?
Yes, I have, of commercial properties are 480, I think I said, out of which 368 are less than $1 million. Out of that 368, 114 would have qualified, certainly probably a number greater than that at the end. Once the list got developed and,
May I ask a question?
sure.
So on the ballot, this article passed quite a bit, majority.
It was overwhelming, yeah.
Yes, so my way of thinking is that most small business owners, according to these numbers, do not get this benefit. It's the business owners, but not the businesses themselves, and I don't know if people understand
It's the
that.
owner of the building, not necessarily the business.
And I don't think people really understand that, so I'd like you to explain that again.
Well, that part of it, somebody owns a building, it's an investment opportunity for them, they own the building. They do not have a suite there, they have no business there. They simply lease it out to 6 or 8 customers, tenants, all of whom have a less than 10 employees. The building is valued at $980,000. They would seemingly qualify for this particular exemption and get the tax break we're talking about. And that goes on to the landlord, the owner of the building.
And not necessarily each business owner.
No. No. Now, whether he passes it on to them or splits it or whatever, that's his prerogative.
So he has the say in that. He can do what he
Absolutely,
wants.
Yes.
So it's not in law that they will benefit as well.
And I'm not sure, I think anytime I talk to anybody about the small commercial and you kind of give a quick, less than $1 million, 10 or few employees, I think they stop hearing me at less than $1 million. I think there's a perception out there that any building under $1 million is just going to get it. And that's simply not the case.
Thank you.
I have one last question for you, I'm sorry. I
problem.
probably could ask you questions all night, but I'll leave it up for the rest of the
I'm
committee.
here, no problem, Tom.
So, assuming we did adopt tax classification, and whatever the burden changes, it doesn't matter. I guess my point is, if you're an income property owner in town, let's say you're the owner of the Summer Street Plaza. You've got 20 tenants, they're all paying rents. I don't even think it matters whether they're triple net rents or gross rents, but we'll assume that they're triple net rents. So his taxes go up. He's just taking that tax bill now and dividing it out and charging it to his tenants. Maybe he's able to raise the rents, maybe he's not, depending on, I guess, whether it's a gross or a triple net. But at the end of the day, you've got an income level of this, your expenses are going up. By definition, your value goes down. And when your value goes down, that means your tax burden goes down, correct?
Right.
So then this classification that was put in place kind of has the reverse.
There's been some studies, I haven't read them in some time, that show just that. The way, you're right, when coming up with the valuation for an investment-grade property, as you know, I'm sure, it starts out with the total gross income that the property receives. Then you back off for a vacancy and ultimately expenses. It may be included in there. More than likely, it's going to drop down below that where you come up with the capitalization rate. And the capitalization rate, which is used in business as well as appraising, is a way of capturing coming up with a value based on an annualized source of income, of net operating income. So often what they'll do, and I've seen it, we've had it done to appraisals we've ordered, is that the cap rate, the tax rate is built into the cap rate, effectively dropping down the valuation. So one way or the other, whether you recognize it as an expense or load the tax rate, it's called. It's an expense, particularly for investment-grade properties. Somewhat different with those proverbial mom and pop stores.
So if it's investment grade, you're increasing the cap rate with the increase in
Right,
rent.
right. In that case, it would come, which drives the
Correct, yeah.
I guess I'm not quite understanding that. If you own the property and you're holding your tenants in a triple net lease, and then you just pass along the increase in the taxes, right?
That's right.
So how does that impair your net operating income? Isn't it a wash?
Well-
You are on the hook for more, but you take more in from your tenants as well.
Right, until you hit that critical point where there's just no more. But what I was speaking of was an appraisal. An appraisal coming up, to come up with the valuation for a property, either for a court case or asset review. it would be recognized as an expense of some sort, whether it's in an expense line or putting it to the cap rate. Just like it would be management, improvements, all of that would be expenses utilized in coming up with the valuation. It would be reflected as an expense.
Even though you're
it's an
seeing
expense
additional-
burden.
Even though you're seeing additional income?
So-
Right, if you're just passing it through, then.
Here's the catch. I think, so you think in terms of what a capitalization rate is, it's basically, I'm really kind of dumbing this down, but it's a rate of return kind of thing. It's an industry type of rate of return. But even though you have if you have this property over here, let's just say we go into recession and all of a sudden 10 of those units are vacant, the tax burden's still on the owner. He still has to stroke a check every quarter. So there's risk involved in owning that property, whether it's fully leased or not, and that's where the capitalization rate comes into play. So
Right,
it's a
I
burden
mean-
on the capitalization rate.
But that's an economic risk, not a tax-related risk, really, right? I mean, whether it's a single rate or a split rate, if we have a recession, it's gonna be bad for business.
But you're increasing the burden on the property, so it lowers the value, is the bottom line.
Can you get us a 1 or a 2-page summary of how you go about valuing
Absolutely.
commercial and industrial properties?
Sure.
I think that would be
Residential as well?
helpful.
Or just
Yeah,
split?
you know what, why not, let's do them all, right?
Yeah, absolutely.
I'd love to maybe, if you could elaborate on the capitalization rate and how that's impacted.
I will.
Because
I'll
get
show an
your-
example
I
of
get the confusion.
Yeah, I've got examples of it that are from different findings of fact from court cases.
Awesome, thank you.
Yep.
Yeah, that'd be great.
So far as the process and what the timing is for the commercial, I was concerned about that.
Yeah, you mean of everything we're reviewing here, the timing?
Yes.
Yes. As I said, I submit everything to the Department of Revenue in September, October. That includes, once again, all these valuations, and at which time the selectmen take that vote. That's why Pat kind of brought up, initially we're looking at a December kind of horizon. Kind of throttle that back to more of an October, partly because of to split the tax rate in terms of burden on me is a couple clicks of the mouse. It's not arduous. The residential exemption is not particularly arduous either. The small commercial exemption would be time consuming. Doable, but I just need lead time on that. We literally have to key them in one at a time in order to make sure that they get in there. It's not that big a deal, but again, it's just time consuming. So that's why ideally October for that. The other thing I wanted to mention with respect to timing, these other personal exemptions that we're going to embark on, I sort of have that in the back of this presentation. But if we were to seriously look at those, this committee was to seriously look at those, we would want to have something in place by August. I believe the selectmen sign off on, it's a town meeting vote, so we would want something by August. I didn't know if you wanted to, switch it around, or if you think that by that time frame you might have a handle on it. The personal
Well,
exemptions.
whenever's basically good for you and when you get the information, I think would be the more thorough
Plus
information we have.
The other option, of course, is go through it as it's kind of been laid out, make the recommendation, it will go on for FY20.
Are you successful in getting all of the assessments from the commercial properties? I mean.
Yes, relative to other communities, yes. And what I think what you're talking about is the income and expense stuff that we send out.
Okay.
Every year, we send out an income and expense form. One may have crossed your desk or two over the years. It is frankly, it's an invasive piece of paper that asks for the owner of the property or the tenant who's ever filling it out to give me all of their income property as it relates to the real estate. I'm not interested in the business in terms of the income. And the expenses associated with that income-producing property. From that, and with that, I'm able to develop a valuation. Now, I don't take that data and just use it for that particular parcel, but rather collect it all, key it into the system, and come up with market rents, market expenses, and develop a cap rate, and then apply that across the town for the commercial industrial property. So What doesn't happen is I don't take the individual experience of a particular building and apply, in terms of rents, and apply it to that building, because they could be easily outperforming a very comparable building right next door, and we would have valuations that are offset by quite a bit. But rather, we're trying to establish a relatively stable commercial industrial. But to answer your question, we've done much better with getting the data into us. We're probably getting around 53 to 55% rate of return. We do impose a fairly significant fine for anybody who does not, $250. And like I said, we get a 53% return. It's pretty decent.
Yep.
We have other secondary, I subscribe to CoStar, which is well, it's a real estate kind of clearinghouse for all kinds of information. One of them is rents. So there are secondary sources of getting this information.
Frank, is that penalty tacked on to the tax bill, or is it
It
billed
is.
separately?
It's itemized on the tax bill. It's $250.
People not see it, they just pay it, or?
They see it. Some pay it because they find the form invasive, and they just as soon pay it. It's cheaper to pay it than call up their accountant and have them develop this. But I send it out at a time of the year when much of this information is in front of them. It's right at the beginning of the year, where it's somewhat handy. The rate of return's gotten better over the years. Some comply, some don't.
53% sounds pretty low to
Woeful.
me.
Yeah. At one point in time, we were at, what, 25, 27%, Sam? 23%. When the law,
We're way ahead of most communities.
No kidding.
once we went to $50 to 250.
53 is a good number.
Right. In a parcel that does not comply to send in the I&E, puts the right of appeal in peril. They can apply for an abatement. I see that they haven't filled anything out. I appeal to them to send something in again. If they refuse, we probably deny. They file it to the appellate tax board. The appellate tax board gives them another bite at the apple. If they refuse then the case is dismissed.
That 250 limit has been a change since this 2004 report.
It's about that time frame, yeah.
Used to be 50.
Yeah, no, and mentions 50 in that report, that's why.
Yeah. Some pay it willingly. Every once in a while, they'll give, have something to say about it, but, or act like they're seeing it for the first time, but most just pay it.
Evan, do you have questions?
I'll just do a couple quick ones. The 2004 DOER report, it makes all kinds of recommendations. Did any of those ever move forward at any state capacity?
That I'm aware of, no. The ones that have relate to the personal exemptions. Some of those we enact, at least here in town. About 10, 12 years ago, we increased some of the asset and income limitations on those that are about as generous as they get, but it's still well below what you would typically expect somebody to live in Chelmsford and subsist on.
And then I think your handout mentions the 2005 town study.
Yes.
That's been the only town study since?
No. Well, since the '04 one, there was the 1995 study.
No, but since 2005,
Yeah.
there's been nothing?
Yeah.
Okay. So at some point in this process, I think it'd be good to know from the assessors what has changed since 2005. And that's kind of the data.
You mean in terms of how they do business, or kind of what they're seeing
The
in the
levers,
market?
all the levers that can be, that are in the report, the data points that are in the report that speak to the ramifications, implications, the pros and cons, the impacts. To me, you need to understand what the data points are and how those levers get pushed and pulled. And I'm not suggesting that we, the town, controls any of those, but I think it's important to understand what those levers are, what those data points are.
So in addition to the single or split rate, the small commercial exemption and the residential exemption, what you're referring to is largely those 9, it's not quite 9.
I'm
because
referring
the
to,
real- because
I'm referring to the
residential exemption is
basic
one.
nuts and bolts as to, how and why classification works or doesn't work. I need to understand what those data points are. We're tasked with trying to find out, well, communities that have pursued classification,
Uh-huh.
And there are communities that have been doing it for a decade.
Right.
What are the lessons learned? And all those are based upon data. Right, there's trends that are based upon data.
Evan, do you mean, say, the demographics with, say, the residential? How many houses have school-aged children in them? That type of, the
No. And
ages?
so some of the data points I'm not familiar with. I think that's where, all the numbers and reports in here are great, but they're all based upon some basic data points that I think assessors understand, routinely talk about and understand.
Okay.
I'm not, I can read and understand what's in front of us tonight, but having a basic understanding as to what are the numbers or data points, the methodology that goes behind how one would determine, you're trying to project whether classification is a good policy or what the implications are. And at the end of the day, if we recommend, I think the selectmen are looking for, well, how do you roll that out?
Mm-hmm.
So
Okay.
there's got to be different data points that,
Yeah, I think we're gonna
Just in
have,
that
I think we're gonna
conversation.
have to do some work on that as we go along, and, but that certainly, I think, will be a section of the report, identifying the important variables. Again, if you see this as a decision that needs to be made every year, it's okay to make a mistake one year as long as you clean it up the next. The problem is if you make the same mistake over and over again. So you need some kind of feedback, some sort of loops to tell you whether things are having the intended effect or
Right.
if things are going sideways. And yeah, so what sorts of things should the selectmen be looking at? What kind of metrics can they monitor? Okay.
Can I just,
Helen, yeah.
do you mean, Evan, that you want the assessor's office to tell us what all of these towns, what they based their tax rate on and how? Is that what you're saying?
no, what I'm saying is that we've all read the reports. And they make, the state DOER report and general reports online that are town, Chelmsford specific or not Chelmsford specific. They all come with findings and conclusions. And those findings and conclusions are very high-level assumptions based upon data points. I think we need to kind of funnel that down to be Chelmsford specific. So I need to understand what are those national or state, local data points that communities have used in the past to make a decision. And they've chosen to pursue classification.
Yeah, we may have to,
Yeah.
we may ultimately have to come up with our own set as recommendations. It may not be, it may not be that everything, yeah, but sometimes it's easier to learn from somebody else, either their successes or their mistakes, as opposed to reinvent the wheel.
Well, I think it's another bullet item, but in terms of future
Yeah.
presentations, we should be looking at talking to some of the other
Yeah,
communities.
right.
Yeah,
Okay, do you have any questions?
no, that's what I was wondering,
Okay.
if we were going to be talking to them, coming up with our own data and asking them
Yeah,
questions.
well, I think we can talk a little bit about that on the next item,
Okay.
when we talk about future presenters and who we'd like to
Okay.
see too. John, do you have questions?
Yeah, and the first one I'm actually going to direct through you to Frank because it essentially represents a data request.
Uh-huh.
But in your presentation, you have the historical levy and value shares,
Yes.
which go back to 2006, and you mentioned that you used to go back further. And I know I have data from you going all the way back to like 84.
That's about when
I think the older data has value.
I agree, and I'd expand on that. Can we, are there copies available of the 2005 and, what is it, the 95
They're
reports
available,
on
yes.
classification?
Yep.
I mean, they had their own specific areas of concern, and I think we don't want to just take them just as a whole, but I think there's some valuable data in there and I'd like to make sure that there's some kind of continuity between what those studies looked at and what we're looking at as
Okay,
well.
I'll send you all the reports I have.
And then on the example that you provided for the personal exemption, residential exemption,
Okay?
I tried to extend it, and I just wanted to make sure I'm thinking about this the right way. So this example that was provided shows all of the different possible values and impacts for owner-occupied homes. And so I tried to extend it to cover non-owner occupied. So for example, if we had a non-owner occupied property, residence, valued at 730,000, it would not get the exemption, but the new tax rate of 20.95 would apply. Is that correct?
Yes.
Okay, so that means, as an example, if we did have such a property, the tax increase for that property would be just a little less than 2,200 for that tax year. And if we took the average valuation for apartment buildings, 2,445,000, applying the same formula, the tax increase for that property would be a little over 7,300. So just extending it. And then the other question I had, actually, I just want to make sure again that I'm thinking about this right. This was something I was completely unaware of. So under Proposition 2.5, communities are allowed to increase their levy by 2.5%, but there's also an accommodation for new growth. And what I didn't realize is that if you do have a split tax rate, the tax factor for commercial properties applies to the increase in the tax levy if it results from an increase in valuations for commercial properties.
That's right. With respect to new growth, I think that's what you're talking about. If they were to enact it this year, because anytime I come up with new growth, when we come up with new growth, it always uses the prior year's tax rate. So for fiscal 19, new growth, no matter what the selectmen do in November, it'll be using the 1796. But suppose the selectmen act and decide to split the tax rate. Now we have two separate tax rates, residential, commercial. The following year, fiscal 20, we have new growth. And we'll have commercial growth of some of the new commercial buildings we know are going up, some residential. The commercial will be valued at the commercial tax rate, the residential at the residential tax rate. Personal property, and this is no small item, personal property would be taxed at the commercial tax rate. When you look at some of these things, you've seen the personal property on a percentage basis is only 2-3%. However, in new growth, it makes up 40 or 50% of my new growth pretty consistently each year. So what ends up happening, new growth almost every year, and I could even develop a spreadsheet on this. Let me get this right, explain this right. We have an 80-20 split right now in terms of the valuations here in town. New growth does not follow in that line. New growth tends to be closer to a 50-50 split. We end up happening, because of personal property, we end up capturing more new growth on the commercial side, or as much new growth on the commercial side, inclusive of personal property. So to your point, John, you would apply in future years the commercial tax rate, which would alter the new growth valuation. If you were to compare single tax rate, all things being equal, a single tax rate, new growth being consistent, all things being equal, versus a split rate scenario, the new growth numbers would be different.
Thank you. I'm all set.
Okay.
Did that make sense?
It'd be larger.
Right. Dan, do you have questions? Sheila?
Just a couple.
Yeah.
Under the background and the implementation of the tax classification under the DOR summary options,
Yes.
one of the issues is, one of the bullet items is authorizing ever-increasing shifts to the commercial industrial property class is not good public policy and at some point raises constitutional issues. Can you explain what that means?
Not being an attorney,
Okay.
I can't.
I don't understand why.
I've heard it referenced before. I'll call DOR legal and kind of delve into that. But I think it has to do with disproportional taxes ultimately. But I'll contact DOR legal to give you a more expansive answer on that.
There is a cap, though, on what the possible split rate is.
Yes,
So
absolutely.
it can't be increased indefinitely.
You cannot.
And do you know of, and I'm happy to hear if you learn more about it, but do you know of any constitutional challenges since 2004?
Surprisingly, no. Because I've heard it mentioned. I've heard DOR attorneys referencing, saying, something to it.
Mm-hmm.
She didn't expand on that.
And actually, wasn't it about the same time that, around 2004, that the state actually temporarily allowed the max factor it increased from 1.75 to 2?
It did.
temporarily?
in some communities, including Billerica, and I think Lowell adopted it, allowed some communities, because of the shifts that we were having, the valuation shifts, natural valuation shifts, it allowed some communities to go up to 200%. And it, once again, the intent of it was to stabilize how much the residential are paying in terms of their share in the commercial, to exceed what had been law, with the caveat that over, I think, 5 years, that community began to come down off of the 200 and settle in at no more than 175. Many communities took advantage of that. I can't imagine how painful it was coming down off of that and ultimately passing on more of an increase to the residential over time. But yes, that was right around that same time frame.
The differences in services between residential and commercial. Could you address that just a bit?
When I read that, I think what they're referring to is some communities that might be like seasonal communities that might have really a greater burden on some of the services. It's something that has been addressed in the past. I don't know if it's been really completely. Sam, do you know some of the items that are discussed with that?
Sam Chase, Board of Assessors. That issue was, and as you will see when you get the reports that Frank is going to forward you, the 2004 classification study report, the 2005 follow-up report by the Selectmen, and the 95 report. They talk about use of services as a criteria, as a justification for establishing a split tax rate. The idea is if it's thought that the commercial and industrial property sector uses more services or uses municipal services in a greater degree, that would justify charging them a higher tax rate. That's the premise behind a use of services rationale. What Frank was alluding to, and actually I did quite a bit of study in this area myself back in 2005. There are a very few communities in the state that have seasonal populations. And if you talk to a few of those communities, and I'll give you a couple of examples, community of Oak Bluffs on Martha's Vineyard. If you were to go back, and I actually did this so I can speak from experience, talk to the selectmen and you ask them, why do you split the tax rate? Why do you charge the commercial and industrial sector a higher rate? And they say, we feel we are justified in doing that because we have a seasonal economy in our town, and the beneficiary of the seasonal economy are the seasonal businesses that come in to our community for 3 or 4 months out of the year. That causes the town to have to spend more money to provide infrastructure to support the increased population. So the selectmen in communities like that feel justified in establishing a split rate in part because they feel that the commercial activity, the seasonal commercial activity requires them to spend more money on municipal services, and the commercial class benefits from that because they derive their revenue from that seasonal activity. So I think that's what you were referring to. Yeah, and you'll actually find, I actually talked to 4 or 5 communities like that 13 or 14 years ago when we looked at this issue, and that's really the reason they gave. So, did I answer your question?
Yes, thank
Okay.
you.
Thank you, Sam. Some of the communities that take advantage of the residential exemption are seasonal communities of Barnstable, Nantucket, Provincetown, Somerset, Tisbury, Truro. Other ones with quite a bit of rental inventory stock would be Boston, Brookline, Cambridge, Chelsea, Everett, Malden, Somerville, Waltham. So those are typical communities. And there's 15 communities in the Commonwealth that have the residential exemption. There are 14 with the small commercial exemption. Of the 14, only Westford is without a split tax rate, as Mike referenced earlier. All the others have a split tax rate.
And actually, Somerville just passed a home rule petition, or had approved by a home rule petition, to extend the residential exemption beyond what is
Beyond
currently
what comes
called for.
statutorily, yeah, I'm not surprised, yeah.
Are there any communities in Massachusetts that don't levy a 2.5?
Yes, on that list, you'll see technically those communities with an excess levy capacity of
Okay.
greater than, they're technically not going up to 2.5%. But for the most part, no, most communities do.
I would assume that those communities that do not levy the 2.5, they do get a lot more state funding.
I haven't looked at it from that perspective. I'm inclined to think that's the case.
The answer to that is yes. We did look at that. Lowell is a good example.
Yes.
Bill Ricker, Franklin, actually.
And I would also think that the state funding for the schools would come into play, most certainly somehow. I mean, it's huge, the difference.
Very often, communities
So-
that have a lot of excess levy capacity, frankly, they can, because of what you're saying. The state aid is strong, they don't have to levy to the max.
Thank you.
I'm just looking, I don't think they're all get a whole lot of state aid. I look at some of them with pretty good excess capacity, Concord, Carlisle, whatever. They're also different nature of communities also that can raise,
Right,
have the ability to raise more than they need for
that's
their
right.
budgets.
That's why I say the excess levy capacity, for one reason or another, is because they can afford not to
Yeah.
necessarily, whether it's state aid or they simply can afford to because it's a wealthy community.
That's one piece of being able to afford it.
Right.
Yeah.
And so you're talking about debt exemptions that are passed in certain towns that are not passed in other towns as well for certain
Well,
items?
not so much a debt, it would be an override in general, but
Right.
just our wealthier, frankly, communities that can keep it.
I just think it's very important for the community to understand that there are just so many factors that go into this finding. And, quite frankly, I've always thought that we don't get the state funding as we should as a community. And that's one of our issues, moving forward when we look at this.
Just a couple of definitions along the way. On your page where you talked about residential exemption, you talked about Class 1 residential properties. Is residential Class 1, or
Yes, it is.
is there a is that a
Redundant.
type of residential
It was
property?
redundant, no, class
Oh,
one.
okay. And the DOR report talked about proportional assessment, and that's where it seemed constitutional.
Among classes, to make sure that the assessments are relatively stable going. One of the things I have to do when coming up with evaluations each and every year is make sure that among the classes, commercial, industrial, personal property, and residential, that they're relatively considered, they're at roughly 94, 95% of fair market value. In the handout that you're talking about, how I come up with evaluations, I'll include that. There cannot be wild swings in valuation in terms of the classes. I can't be valuing the residential on a median basis at, say, 95%, and then commercial at 89, or 101 for that matter. There has to be a relatively tight relationship between all of them, within 5%.
That's sort of what I gathered from where they were, it sort of started out where they talked about how communities back in 2004 that they studied, some of them were only valuing residential
That's
at,
right.
70-80%, whereas industrial was
That's right.
valued at higher levels, and that was
What they
the
would
problem.
do, I believe, is value the commercial industrial on an annual basis and simply ignore the residential and not value them despite whatever, so that those values remain the same. Naturally, depending on what time frame we're talking about, they were actually and realistically going up. When a revalue year would come along, where they were compelled to do the analysis, then those valuations could have wild swings.
Let me just understand, we aren't talking about these various personal exemptions tonight, but I just wondered, personal exemptions do not in any way assign the taxes that are being exempted from to another part of the tax base.
No.
Those are just covered by overlay or something of the
Exactly.
sort,
Comes
right?
out of the overlay, Mary.
As opposed to the residential exemption and the small commercial, where indeed you give like a residential exemption and those taxes are paid by the rest of the
That's right.
residential.
And there's a shift like I said,
Shift
shift
within-
within class or among the classes. And some of these graphs, I tried to show that the bottom line always hovering the same.
Right.
It was shifted, but the bottom line remained the same. The personal exemptions, as you say, there's a certain amount set aside in the overlay to cover the expense of these personal exemptions.
So, I mean, I think you have to be sure, and the public understands, a residential exemption will help some residents, but it will hurt other residents.
Yes.
Small commercial exemption helps some businesses, but hurts other businesses. The only way you can help all residents is to hurt all businesses. In a sense, with the split, I heard is perhaps the word, but you put the burden on the businesses, and that's the only way to help the whole class of residents. So it just seems to me something to keep in mind, that residential exemptions and small commercial exemptions they have a plus and a minus to them.
They do.
I think that's, go ahead.
But just to follow up on the residential exemption, to what degree over the last 3, 4, 5 years has that been given any consideration as part of the Board of Selectmen
I put
process?
each and every year, I present information on it. How much weight they've given it, or I know they give it due consideration. They've asked a number of questions, pointed questions, that lead me to believe they're giving it consideration and hearing what I'm saying.
So that leads me back to we're being asked to look at everything under the big umbrella. But if certain things haven't been given any consideration based upon the data, why should we pursue it if just a year ago there were data didn't support pursuing it? I mean, that's kind of what I'm trying to figure out is, particularly on an exemption, it seems like it's pretty clear cut. But yet, it seems like we're being asked to do a deep dive on it. And yet, just less than a year ago, I don't believe there was much or any serious consideration given. So I'm trying to understand if the data supports it or the data doesn't support it. If that data exists, we should have it, and I don't want to duplicate an effort that took place less than a year ago. That's my concern.
With respect to the residential commercial, the residential and small commercial, I don't know if you'll find data points that will point you in a certain direction as to whether it's a good idea or not to do them. It's, without sidestepping the question, I see it as a policy, a philosophical question. So, like I said, I do present each and every year. They're engaged. They always ask pointed questions. Ask me, talk to me about it later on, so I know that they're engaged on it. What I don't know, for example, is how many communities the last 5, 10 years have adopted the residential exemption. That might be something worth taking a look at.
Yeah, we might be able to dig that out. I mean, I think the other thing, to your point, is if we can suggest a reconsideration of some things that either have been overlooked or not pursued as fully as they might have been. I agree with Frank that at a certain point you get to a policy level. It's not a yes or a no question.
Right, there's going to be winners and going to be losers.
Whose ox is getting gored? Yeah, who are the winners? Who are the losers? And if you feel like the property tax is a regressive way of raising funds, and you'd like to see it be a little bit more progressive, if you understand the property value is kind of a marker for your income stream, you might prefer to have a residential exemption, where people who are living in smaller, less valuable parcels are paying a little bit less, and the people who are living in the $600,000, $800,000 homes in town are paying a little bit more. But again, I think that's not a question for us to answer. I think the best we can do is say to the selectmen, look, if you pursue a residential exemption, who's going to be hurt by it, here's who's going to be helped by it. Or just say, even we can leave aside the question of hurt and help, we can just say, these people will pay more, these people will pay less. That might be as good as we can do. And maybe there we don't make a recommendation. Maybe we just say, this is for your consideration. Luckily or not, you're the ones who have to balance all of these different interests that are within town.
Yeah, I agree. I think that's sort of why I brought it up in that sense, is to make the point. And I think there are people that hear the words residential exemptions and say, why aren't we doing this? And yeah, I mean, the condo owner, the smaller homeowner, it's definitely going to help. But then there are others who will pay more. And I think, I don't know whether the average man out there understands that. And I think it's important that maybe, if nothing else, in terms of educating, if part of what this committee is to do is to help educate the taxpayers about what all these things mean, I think that's part of our role. I do have one more. We talked a little bit about services. We have homes in town and condo homes, et cetera, for example, that are on private roads or whatever. Therefore, there are certain kinds of services they don't get, like street plowing. Does that enter into their assessment in any way, shape, or form?
Not one bit.
Not one bit.
Let me tell you something else about that. I was bringing that up next.
The reason I say that is, there's a number of roads like you're identifying.
Right.
And when we see the sales come in, I don't see the sale prices impacted by these services lacking.
So that would be the only way it might
Yeah, if I
affect
saw-
it, is
when I
if
see
somebody
pri-
says, I'm going to have to hire somebody to plow my roads, therefore I'm not going to pay as much for the house, that would affect their
Absolutely.
assessment, but not,
As an example, it's not quite the same thing, but to show you that we're sensitive to that sort of thing is busier streets. We put a factor on many homes here that are on Billrica Road,
Yeah.
Tingsboro Road up my way, Groton Road, places like that, Turnpike. So we do recognize those things that impact valuation. Near power lines or extensive invasive wetlands, that sort of thing. We might consider putting a factor on it. So to the extent I saw private ways continually showing that they're sort of just a little bit coming in valued less than comparable properties, I would absolutely put a factor with the appropriate data in front of me, sure.
but essentially it's selling prices that have the,
Yeah,
that
and
much-
almost always they're nicer, bigger homes, it seems to me, that are on those private ways. The ones Peachtree and Shelby and a number of others. There tend to be newer homes, and I say that only because when they first bought and sold, they were newer homes, so depreciation on the building was a non-factor. I knew I could look at that and compare it to all the single-family homes, same vintage, and know that depreciation wasn't the factor. If there's any difference, it's attributable to one thing that I can think of, all things being equal, and that would be the private way and the lack of services.
I have a couple of things. When Mary was talking about, where do 40Bs come in? And are 40Bs strictly in condos? Because if it's a 40B, do they not only pay half of their taxes? No. That's not true. Okay. How much do they pay of their
Pay
taxes?
full and fair cash value, 100%. There's no tax given, no break given.
Okay, that is not what we were, okay.
Well, I guess the question, though, is if you look at a 40B project, let's say you got a market condo and a 40B condo. an
Oh, yes,
affordable
I
condo.
apologize, yes.
To get
In that
the
instance, yes.
value is less, so you're
Yes, on a
paying less
condominiums,
tax.
thank you, Tom. I was thinking apartment building, I was thinking apartment buildings more than
What did you
condominiums.
say? How did-
Ownership.
If you have an affordable unit against a fair market value unit in a 40B project, the values are different. So the tax is based on your valuation. You're
Yes.
paying, for instance, you might be paying $400,000 for a market rate, you're paying $200,000 for an affordable, you're paying tax on the 200,
then
you're
let me-
paying tax on the 400.
I hear what you're saying, but then let me blow it out of the water on this one. You've got Windermere and you've got Meadowwood, side by side, okay? The reason Meadowwood and Windermere are valued so high and people are rushing in from all other communities with money to buy into this is because they're single detached homes that don't have the same kind of, well, Meadowwood doesn't, I can't speak for Windermere, the same kind of, we pay for the outside, our roofs, our siding, the whole thing. It's not a typical condo, okay? Because of that, our taxes have skyrocketed, but the value of our homes have doubled in 20 years.
Glad you said that, because.
Right, and you see that. The problem that I see with that is, people have had to leave Chelmsford who have lived here their whole lives because they bought these very low 20 years ago. And then their neighbors moved out, made a fortune, and then they can't afford to pay the taxes here. That's why I was asking you what the difference is, because it's not your typical condo, it's not Williamsburg, it's not some of the others, in the sense that the values are single-family detached homes.
When residential real estate values were dropping a number of years ago,
We stayed the same. And we
you stayed
went
the
up.
same or improved.
We
I can't say that
improved.
about too many other condo complexes
Right.
here in town.
Right, right. And so the complexes that are 40B are paying full taxes like anybody else is.
A condominium that is, has a deed right or a deed restriction, it will be spelled out, what
Right.
the restriction is. And yes, to answer your question, that assessed value mimics the sale price, if you will.
Okay.
When they come out of that, very often they come out of that, I'm not familiar with this, but I work with Dave Hedison a little bit on this. I think the intent when somebody owns a set-aside property, is going to sell it, it's exposed to the market for a while. If there are no qualified applicants, they then sell for full and fair cash valuation. At that point in time, the deed restriction comes off and my factor comes off.
But the homeowner doesn't get that amount of money that had the 40B. It
Still
goes to
sells
the
at
town,
full and
right.
fair.
Have you seen that happen? No, you have.
For whatever reason, I don't know why there would be a shortage of applicants. You would think there'd be, no shortage of applicants for these properties, but maybe Dave Hedis can answer that.
Okay, any other questions?
I get an easy one.
Sure.
When was the last time we had a split rate?
What was the year? I was just about the time I came here, 2001, 2002, maybe even 99 or 2000.
Yeah, it's before.
No, it's before
That'll be
98.
included in the spreadsheet that
Yeah,
that
right,
you referenced,
exactly.
because I'm pretty sure that's in there.
In one of the earlier reports.
And it was at its max, I think it was 5%. I don't know how long it stayed there, a couple, 3 years, and then incrementally dropped off.
It was around the time that we started the sewer project in town, wasn't it?
Yes.
Wasn't it related to the sewer project? So I would think it goes back into the 90s.
Yes, it was before 98, because it was before.
Right, but I mean, like the last year, like Dan was asking last year, 2000 sounds about right. Yeah. That'll be included in the
Yeah.
sheet.
Okay, thank you very much,
Thank you
Frank.
very much, appreciate it.
All right, next up, discussion of future presentations. We've touched on it already, but I guess we'll start, Dan, I'll start with you this time. Do you have anybody or anything that you think we ought to hear from or about as we go through this process?
I would like to hear from businesses that would or would not come to Chelmsford if we raised the tax rate, the split.
How would you know who they are?
Yeah, I don't know how you
How
find
would you know
that
where to
out.
find them?
We've got 2 organizations in town that should be doing that as a living.
Oh, okay, I just was wondering.
I think
Right
that
there
question is
is
more
one.
small business versus
Doesn't matter.
big business.
I
Oh, it
just
does
would like-
matter, because a small business is what's impacted. The big business, as we've seen many, many times in presentations, they're less sensitive to tax increases. It's lower in the scale, the factors that play a role in why they want to come to Chelmsford. It's in the top 10, but it's not close to being number 1. You take a small business and it becomes very important.
Okay, all right.
Do you want to hear from businesses that are already here? Do you want to?
I want to hear
Because
from
we could-
businesses that haven't come here because they don't like
Yeah.
something like taxes.
All right, we can maybe reach out to the Economic
find them?
Development Committee and see if they have thoughts on that. I mean, another way to do that might be to talk to a commercial real estate
Yeah.
broker, somebody who has seen rates change in different towns or different communities, and might be able to give us some kind of overview of what they see. I don't know if there's other data available tracking that sort of thing. I mean, if we could look at, I don't know, growth in jobs in places that he'd either put on or taken off a split rate.
Helen has asked a couple of times the question, how do you find them? I have a different question. How do you find anything they say credible?
That's a good one.
Seriously, if a tax classification study committee asks them for an opinion,
Yeah.
they're going to say, no, I don't want that. If another committee that's looking into increasing the minimum wage asks them what they think, no, that's going to be bad for our business.
Well, I think this, goes back to something we talked about at the last meeting, the difference between, facts or testimony and opinions. I agree, it's easy to have an opinion or to say that something would be bad, but if you can back it up, if you can say, I've had this experience with it, or this is how we make our decision, and this is where in the decision process we'd explicitly take this into account, I think you gain credibility. On the other hand, if you just come in, as you say, and say no to everything, then I think you can make draw other conclusions about the credibility of that sort of statement. I'll reach out to economic development and see what they have to say. And unless you have somebody specific, we'll go from there.
Okay.
Sheila, presentations to
yes.
hear?
Paul Cohen. Just his thoughts, general thoughts. What about NEMCOG? And in there, looking at economic development for the future and how this might affect that? Or how it has affected other communities positively or negatively?
Let's see what Pat has to say about that. I know she's done she's been the
Okay.
liaison for a long time with
Okay.
NEMCOG, and she might have a sense if they've looked at something like this or if that's not really their bailiwick.
Relative, yeah. Okay, that's fine. And then I'm just wondering if any of the town meeting reps would like to speak at an open forum about their thoughts.
Well, I think the idea of an open forum in general is a good one. We might not restrict it to town meeting reps.
Right.
Yeah, maybe, again, I guess that raises the question of whether Monday night is really a great time for it, but we only have so many days available. Do we want to pick one of our meetings and say that we're just going to hear public input there, and that would be the focus of it, really?
Yes, because I don't want people saying, well, I didn't have a chance to speak my mind or speak my opinion, and we certainly would need to do that, I think.
I suggest we're gonna do that, and I think that's a wonderful idea, that we do it, we start advertising it somehow between us from now, but pick it in September when everybody's done with vacation,
I
so
think-
that they don't say, oh, I was on vacation.
I think that's a good idea. Doing it later in the cycle also allows people to inform themselves or to listen to what we have to say, to listen to some of the presentations here, and maybe we'll get more developed questions. All right. We'll put that on the back burner, but yeah, something like September I think makes a lot of sense once people are back in town. Any other presentations? That's it for you. Mary, do you have anybody in particular?
Not at this moment.
Okay. Tom?
I'd like to have a real estate professional here to maybe talk turkey to us, a commercial real estate professional. I'd really love to see someone from the DOR come in and talk about what's changed since that 2004 report, or how they can enlighten us on where we should be heading. And lastly, I'd like to see what some of the other towns are doing. I think perhaps a good representation for us, you look at us next to Lowell, maybe we get a Leominster and Fitchburg to come in and talk. Leominster doesn't have a split tax, Fitchburg does. We can hear both sides of the coin there. I'd like to hear from Burlington, what's going on there, what can they tell us about how it's working for them?
Well, is there another town that would be comparable with Chelmsford so far as the percentage of commercial versus residential?
Leominster is
Are
pretty
they?
close, yeah.
You know who was, I've already When I heard about this, I called the town that I lived in prior to this and said, because when I left, it was a few commercial buildings, and now it's exploded. And I called the assessor's office and asked them, and it was really interesting to hear them say that when they had a single tax rate, nobody showed up. The minute they changed their tax rate, the place exploded, and that town is Bedford. And Bedford has exploded, and she said it has not bothered them on a dual tax rate at all. In fact, for some reason, she thinks it helped them, which I thought was kind of ironic for her to say. But again, this is somebody on the other end of the phone, and she could have been a secretary. I don't know who she was. I was just asking the general question.
Yeah, I guess that's one question about reaching out to other communities in general is.
Well, this was
Who do we try to talk to? Do we try to get a town manager? Do we try to get somebody from the assessor's office? Or just the head of the Board of Selectmen? I think, I worry about somebody who hasn't been there for a long time, having the same kind of credibility problem as any random business that comes in. It's gonna be hard for us to evaluate people's biases in a half hour, 45 minutes. But I don't disagree that we might target some communities, especially if they have some specific experience with something that we're looking at, or somebody who's been there for a long time. My example for that would be to reach out to Westford to hear a little bit about their experience with the small commercial exemption. And Frank, I guess I would ask you, do you know their assessor? And I mean, do you think that they'd be helpful for us if we could invite him over for a week? Or
I do. I know Paul Plouffe, the assessor out there, fairly well. I could either invite him to come in, whether he'd come or not, I don't know.
Yeah.
Or if you could give me a series of questions you'd like me to ask him, send it off on an email, and he would address them. They're also, you probably may or may not be aware, Westford right now has this very committee formed over there reviewing these very same issues.
I did not know that.
Yeah.
Okay. So Leominster, maybe? Have you got a contact
Yeah,
there?
I'll reach out to, I'll find, would you recommend us going to an assessor or to a selectman, or?
I would say the assessor. The other person that might volunteer her time, but Lisa Maroney,
Yep.
she's familiar with both of those communities. She might be able to give you some insight.
Thank you.
Okay, thanks.
Can I just?
Sure.
Also, my first reactions to what Tom said was, but those aren't communities like us, or, maybe like Fitchburg is much more, I think.
They're very close in terms of property composition to Lowell and Chelmsford. In terms of residential versus commercial.
Okay. I'd be
You're
interested.
talking a suburb and a city.
You mean in numbers?
Okay.
I'm sorry?
You mean in numbers?
Oh,
Portion of,
This is why I was asking about the data points that drive all of these things.
Right, and I think we could spend
I don't think
a
it's
lot of time on
the
this.
80-20 split. I think it's how much square footage you have of CIP. To me, that's the driving factor. But to answer the question on presenters, not so much presenting, but I have a list of kind of theories, working theories, that I would like to ask the Chelmsford assessors whether those theories hold water, and then what is the data behind those theories. To me, it all needs to be Chelmsford specific. It's nice to look
Yeah.
at Lowell and Westford and Fitchburg and what have you. At the end of the day, the data, once we identify the data points, we should be able to study it in a Chelmsford-specific fashion.
I hear what you're saying
Continue
about
to
that.
drill down in that
It is
manner.
always a challenge to find suitable, comparable communities. I mean, it happens on both the town side and the school sides. You want to benchmark, but it can be difficult to say what the important variables are. Whether it's, as you say, square footage, or just miles of roads, or kind of the mix of commercial or whatever else. I guess I'd prefer to err on the side of casting a wide net instead of trying to overthink it, subject to the ability of the committee to get things done.
I think it's important for us to hear from communities whether it's worked or why it's, why it's worked or why it hasn't worked. And if anything, we get that information.
Yeah, maybe something to start with is just a list of communities who have put a split rate in and those who have taken it out. We can generate that fairly easily from the DOR.
I already have it.
Okay. And then we just need to go through there and maybe we'll take a look at some of those names and see if we kind of feel like some are more comparable than others. Again, I don't know that Burlington's experience is really going to be a good
And
guide
I'm also
for
curious as
Chelmsford.
to, I was surprised when I looked at the, nearby communities, that some communities that have very small commercial base still do a classification at the maximum amount. And I'd just be sort of interested in their thinking and why they went this approach and how it works for them, because I can't imagine they get much
Okay.
benefit.
I think,
I'm
yeah,
looking
looking
at
at edge cases is always,
at Lexington, for
Informational.
example, and what was the one that was, well, Concord is even, Bedford may be worthwhile, but where's
Carlisle's
Lexington?
99.9.
Yeah, Lexington has only 11% commercial, and Lincoln has gone to a,
To a split
I'm
rate
just
as
sort
well.
of curious as to what motivated them to do this, because I've always been sort of the opinion that if you don't have a sizable commercial base, then splitting the tax rate doesn't get you a whole lot in behalf of the residents.
all right, in terms of breaking out communities then, should we start by having John send out a list of communities who have either implemented or discontinued it?
How about if
For the-
instead I hand it out later? And then-
Okay, and then perhaps at the next meeting, we can narrow that down to 8 or 9 communities. Some of this might be, these might be email questions as opposed to having people come in, but if we could just reach out to somebody in those towns and say, what was your experience with this? These are the questions we have, then we can get that moving along, if that's acceptable to everyone. Evan, did you have other things? Okay. As far as your questions about how things work, theories, that sort of thing, do you think those are something that you can put into a email format and then we'll send it on to Frank? Helen, do you have presentations or presenters you'd like to have come in?
Not at this time.
Okay.
Looking for balance, if we are to have someone come from commercial real estate, we should have someone come from residential
I
real
agree.
estate. I think the Chelmsford Economic Development Commission should be given an opportunity to come give us their perspective. And given that we do not have a Chelmsford Residents Association or a Chelmsford Social Development Organization, maybe the Chelmsford Housing Authority would be the best one to come forward to tell us a little bit about what conditions are for residents in Chelmsford, maybe. And then with respect to, we'll probably get to this a little bit more detail later, but with respect to communities that we might want to invite in, I would suggest Lincoln would be a possibility. Not because Chelmsford is anything like Lincoln, but they are the only community in our list of 23 surrounding communities that have actually done anything in the last 15
Right.
years. And so,
Okay. I don't think I have anything to add. For the residential real estate, I think both residential and rental, if we could find somebody who has some experience with that, might be interesting. I guess the other thing I'd like to hear a little bit about is if there are further tax implications for businesses, assuming a split rate is implemented. I think it's fair, we can see how that affects their local tax bills. But I'm a little unclear on how it filters through to the very bottom line, where it gets modified with the federal and state rates as well. And I suppose now that there are deduction limits for residents, somebody who takes that kind of an overview, not just looking at the local effects, but if there are significant changes that occur at the federal level as well that might make a difference in somebody's pocketbook.
You
That's a
could
good
talk
point.
about an accountant.
Yeah, somebody, is there somebody on FinCom maybe?
You want to know what the tax effect difference is
I'd
for
like to get a
commercial.
global view. I suspect it's not going to be a lot different, but there
Right.
might be some significant differences.
I think you're an economics major, professor, economics professor.
No, somebody who knows tax policy.
Yeah, you need somebody who who does
And
it.
understands what the recent tax bill, the implications are.
I'll find out if finance has a tax professional.
Okay.
The dollar expense goes a lot less now for businesses than it did prior to the tax law changes. You were spending $1 to save 30 cents, now you're spending $1 to save 20 cents. So the taxable effect of the $1 increase is going to be less. I mean, it's going to be more in terms of what it used to be, but there's a tax, so it's.
Right. Okay. Okay, now we get to the fun part of the evening. Committee member presentations and/or questions. John, I guess I'll start with you because I think you have stuff.
Two presentations, two data sets. The first data set is related to the communities that Frank has already provided data on. And what I've done is collected some easy-to-collect data from the Department of Revenue Division of Local Services, the Census Bureau, and also one other data source. And what I was hoping to achieve tonight is just to get a sense from the committee as to whether or not this is a data collection effort on which I should proceed. So as you can see, I've listed all of the same 33 communities that we have listed for tax classification data, and I've started collecting the data for the abutting communities on all of the data points. Some of them I have for all of the communities. And my assessment of what I've been finding so far is that with a couple of possible exceptions, Chelmsford isn't really standing out in any significant way with respect to these data points. I think mostly these data points just illustrate what I think we knew already, which is that we have a pretty high housing burden in this area. There were actually two data points on which I think Chelmsford did stand out to some extent. The data point, the third column, average single-family tax bill as a percentage of DOR income per capita, and that's a data point that comes directly from the Department of Revenue. We actually have the fifth highest rate among these 33 communities, behind only Lowell and
Surely.
Lawrence.
and Shirley and Acton. And the other one is that I think we know this. I think it will show up if we get more data. We're a pretty old community when you look at the median age and percent of population 65 and older. So anyway, I'm more than willing to continue collecting this data if people think it has value, and also collect other data points which people think might have value.
I think it has value. And help me understand a lot, just glancing at it.
Oh, yeah. Now, this is what we need to understand, our thoughts.
Okay, so there's a general sense that John should continue with this.
If you'd like some help, I'd be more than happy to.
Okay, I'll let you know. Thank you.
John, on the back, let me make sure I understand. Like the first column says ownership cost greater than 30% of
Yes.
household income. That says for 25% of household, their ownership cost is greater than 30% of their household income.
That is correct.
That's
Yes.
interesting.
And 30% is the threshold that's considered to be affordable.
Okay. And the income data, that's DOR, and that's based on tax returns, if I remember correctly.
Yes.
You know what would help when you put this, when you have it finalized, if you could include in the cells, maybe just above a link to where you're getting the data,
An
or
actual link, sure.
just some kind of description, so if people
But
want to
actually,
go.
right now in the spreadsheet, there's a comment for each of the column headers that says this is where the data came
Yeah,
from.
I think that's important, just partly because it'll allow other people to help out.
Yeah. So it doesn't show up in the printout,
Right.
but it's in the spreadsheet.
Okay.
And were you going to send us a link to the spreadsheet? Is that what we're,
When
when you're done?
when I think I'm done, I'll send the spreadsheet to Mike,
Yep.
Okay,
and yeah.
got it.
There was actually, and again, I'm going to go through you to Frank, I think.
Mhm.
There is actually one data point that I thought would be interesting that I do not have access to. I think Frank would. Commercial vacancy rates. Is that,
You have access to that if that's your question.
I don't, I,
How, do you want 1 year, you want 5 years?
oh,
you
no,
want
just
10 years?
current. Pick a year and say, recent year, last year.
If it's not any more
Doesn't have to
trouble
be
to get 10
historical.
years' worth, it might be interesting to see if there's a trend.
That'd be fine, and I can develop that. What I would probably do is similar to what I did for the EDC, the 129 group that we had a year or so ago. Again, I subscribe to CoStar. CoStar gathers much of that information and archives it. I can go back 5 or 10 years, and I can select a number of communities, not just Chelmsford, a number of, for benchmarking, a number of other communities, and extract that data.
How similar is this request to what you provided for the EDC?
EDC, I focused on specific properties here in town. I think I can't remember if I grabbed, do you remember if I grabbed it from other communities a couple of years or so ago? I can't recall.
I'm just wondering if people would like to see that first,
Sure.
or,
And if you develop your select communities that you're curious about,
right.
I can look those up and get the vacancy rates and
I don't want to, yeah, we'd like to minimize your load. So if you want to just, can we get the commercial vacancy rates for some reasonable period of time you think's reasonable? And I guess a copy of the EDC report as well, and see if that generates questions, but nothing more than that at this point.
so.
Thank you.
And the second handout I just passed out is derived from a spreadsheet that I downloaded again from the Department of Revenue Division of Local Services that provides, important point, not the split, but the actual tax rates for the different classifications of property. But if you have the different classifications of property, you can get a really good sense for what's been going on. So based on my analysis of the data, this is for the years that are covered by this spreadsheet, this is a complete list of those communities that either adopted and/or dropped having a split tax rate over the period 2003 to 2018. And again, Lincoln is the only one that's in our list of 33 communities. And I've also made some observations, summary and observations at the bottom.
You know, I actually have a slightly different version of this. There's another spreadsheet that just lists the split rate, either 1
Okay.
or 1.5. Many of these are duplicated, some are new to me. There are some that I've run across that aren't in this list.
Okay.
Maybe you and I could combine
Yeah,
those
yes,
and put them
absolutely.
together.
should do that.
The other thing that I've been working on there is getting the actual, the rates that are adopted. And as you note, it's very rare that a community goes straight to 1.5 or even 1.2. If they'll walk it up. So I think we can put some numbers around that, and that's one of the specific things we've been asked is what the communities who are initially adopting a split rate do in terms of the rate that they recommend or that they adopt.
I'm just having looked at this. The last observation, a few communities have
Oh, yes.
commercial to residential ratio slightly greater than 1. You said Westford.
Yes. That's what I'm saying, it's a 1.0, right, for Westford, right? You're looking at the list that says the split for Westford is 1.0. But when you look at this data set.
The shift is what you're talking about. Okay.
The shift for...
I don't, what do you mean?
Okay, here's what I mean. The shift for Westford is 1.0.
Okay.
But when you look at the actual tax rates that are applied to
Okay.
CIP versus residential,
Okay.
they are not exactly the same.
So ratio isn't.
Well,
the-
in Westford's case, I suspect it's a small commercial exemption.
That's what's doing it without a split tax rate, that's why the one.
Okay, I looked at, you had CIP to ratio, and I was just looking at the relative proportions of the levy that is the ratio, and you meant the shift in the tax rate, okay.
And Frank, for those that are less than one,
On that report that I generated?
well, actually, I'm referring specifically to these data points where for some communities, they actually show the residential rates being a little bit higher than the commercial industrial.
Like,
Barnstable was one of the examples. Provincetown was another, I remember.
'Cause they
Could be the
do
residential exemption.
exemptions.
they do,
It might be interesting to match up what you're popping out with with the list of the 14 that have residential exemptions.
Yep.
Always nice to answer mysteries like that. Okay.
That's it.
That's it. Anybody over there have,
I got,
Okay,
yeah, three
Evan?
quick items.
yep,
So one maybe as a agenda item for next meeting. I had heard earlier in the night something about, when we were doing the mission statement, that there'd be an objective statement or an outline maybe.
yeah.
So my thoughts are that I think this committee needs some sort of guiding principles as to how we make decisions, what's more important than less important. And an example of that is, several years ago, I had thought the town's priority was to increase assessed values, which partially led to 129. But a lot of the research seems to indicate that if you pursue classification, it doesn't necessarily result in increased assessed values. So, I'm struggling with trying to play this out 3 months from now and trying to figure out, at the end of the day, understanding that there's gonna be burdens placed on whatever recommendations are made, really, what is the strategy here? And it comes down to what is the town's, strategic vision or plan from a policy perspective. And I understand it's a balancing act, but it doesn't seem like the intended goals and the actual results, they may not line up. So that's something that, again, going back to the data and understanding trends that communities have gone through this, I think that's pretty important to know sooner than later.
This is where I especially miss Pat. I don't know if there are guidelines for us to look at in, say, the selectmen goals, something like that. I think as a question, this charge for the committee is a little underspecified, because I think you're right. Depending on what the ultimate goal is, you might come to different conclusions. If your main goal is to reduce residential property tax burden, then the answer is simple. If it's
Yeah, so
if
so
it's
that's
to
the elephant in
minimize-
the room.
yeah.
It's like, we're either gonna deal with it soon, or we're gonna deal with it at the end. And my concern is that either it's a data-driven process, or it's something else. I think we need to decide that sooner than later, because it's gonna dictate what information people bring to the table and how it's gonna be used. So I think we need to figure that out somewhere within the outline, objectives. What's the rules of engagement? How are we gonna make decisions? I think it needs to be figured out very soon. So I just set that aside. So,
Well, wait, do other people have thoughts on that? I'll come back to you. I don't want to, I think it's an important question. I don't want to get too far away from it. Is this,
We've already, at town meeting, established the overlay district for that part of town. I'm very disappointed we don't have a plan to fulfill it.
Are you looking at me, sir?
No, I think
Yes,
she's, oh, I
but
thought you were looking
beyond-
at-
looking right at you.
Yeah, we're gonna have a problem then. We're gonna have a big problem, sir.
I don't understand.
Yeah, you should probably attend the Economic Development Committee meetings.
Well,
Or better yet, speak to your appointing authority.
I think we will have the Economic Development Committee in here to talk about that, and I think we can take some information from them. I also think it's a
That's a
bigger,
great question, by the way.
I think it's a bigger question than,
That's
than a
enormous.
single area in town. When we talk about how are we going to make recommendations, what criteria are we gonna use to make recommendations? I think that is something we need to
Holy
think about.
mackerel.
And either we need we need additional input from the selectmen, or we can choose to come up with the standards ourselves. Is there a sense what this committee would prefer? Would we rather try to hash out what we think are the significant variables, what we think are the grounds to make a decision, or do we want to go back to the selectmen and say, look, we need some guidance on what do you want us to maximize?
So my handout speaks to that. I just happened to find this. It was on the Foxborough 2017 classification hearing. This is the last page of the assessor's presentation to the Board of Selectmen. I just found this particular list of questions being posed by an assessor to the Board of Selectmen in Foxborough rather interesting. To me, these are the list of questions that we need to figure out if we're going to use them at all to make decisions, or if we're not.
Can I ask you a question?
Hmm.
Why didn't you start out the meeting with this?
I know.
I mean,
Here's
Well-
our list of objectives right here.
Well, because naturally, for some people, it may not be data-driven. It could be a principle-driven, such as the burden on existing residential taxpayers is something that we must address. For others, it could be politically driven. For me, it's data-driven.
But shouldn't it be data-driven for all of us? Because if I have my opinion, and I'm sure that every single person sitting at this table today has their own opinion, but their own opinion shouldn't be what we come out with in the end. It should be come out with all the data we've collected. Am I off base on that?
I agree. I hope we all agree to a data-driven process.
But there's so many underlying circumstances that have been, and discussions that have been going on for decades in relation to
But isn't that all
economic
data?
development.
Isn't all of that
It's a
data?
sensitive, yes, but.
Maybe I'm wrong, but. I
No,
would
it's just,
think-
it's a very sensitive subject, so it's, I know that Evan has been trying to solve that issue for decades, and the town is still seeking ways to increase economic development, and I think that we don't want to hinder that as a
Right.
committee with any of the recommendations that we look at, or any of the issues that come about, because we want that to be a positive issue for the town. So I think therein lies that sensitivity of looking at, both sides, commercial and residential. So these are where the sticking points might come out as we discuss the issues further. But data should be the way.
I would look
I
at
would
bullet number
think-
9. There's other motives besides just principle, and I think politics and economics certainly play into it. We're talking about taxation, we're talking about the revenue side of thing. We're not even talking about expenses. There's another way to change the tax burden in this town. No one talks about it. I think that perhaps may be more political.
Well, I talk about it on the outside all the
Well,
time, but nobody
but that's
listens.
not why we're here, but
Right.
I think we
Right.
need to focus on data points. I think Evan's point is well taken. I think this is an awesome
Me too.
bulleted objective outline for us to follow, at least to start. And try to stay objective.
You know what, you said it's a sensitive issue?
It's all sensitive.
Okay, but I'm saying, shouldn't this committee take the sensitivity out of it and come up with just the facts? Because the facts is what is most important to us, and the data that he's got in here, maybe I'm missing something.
Well, we should be very objective.
Yeah.
I just, I think something like number 4, will a change slow economic development? I'm not sure there's a data-driven answer to that question. We can look at other towns that we define as comparable. We can project or extrapolate to conditions in Chelmsford, but there's not a yes or a no answer that I can see to a question like that. I think it's an important question to consider as you go through a process like this, and I think it's going to be even more important for the selectmen to consider questions like this, to understand their own motivations, to intently make whatever choices they make, right? That it's not done haphazardly. It's done with some sort of principle behind it. Because at the end of the day, if you don't have a principle, you don't have anything. You can all the data you want. It makes no difference if you don't have a destination to get to. We can talk about whether a residential exemption will hurt or help homeowners versus condo owners. That is something, that's a data point.
Right.
The question is,
Right. Right.
is there a reason to prefer a homeowner over a condo owner, or vice versa? Because no matter what you make, or what decision you make, somebody gains a relative advantage.
I didn't think until you said it that we would look at a residential versus condo owner at any time. I thought it would be condo owner, residential are all the same.
Well, I think if you look at the
think.
effect of a residential exemption, even within the residential class, there will be winners and losers. And it could be that this committee recommends we should only have a small commercial exemption, no split rate, no residential exemption, like Westford does it. Or maybe the committee feels like we should go whole hog, go split rate, residential exemption, and small commercial exemption as well, and try to drive as much benefit as we can to the lowest quartile of residential property tax owners in Chelmsford. The numbers will be the same no matter what we choose to do, but the intended outcome is what's important, right? And I think that's where something like this does. It is important. It's going to have to be part of the final report.
And I'm not suggesting
I don't
that
know
we
that
have the
it's-
data for this, or the answers to these questions.
But this gives us the roadmap that we're
Right.
talking about earlier, and we need a roadmap.
I think it's a good roadmap.
Okay. Do you have others?
Also,
Okay. Tom, do you have anything?
I think I'm good.
Okay. Mary?
No.
Dan? Any presentations, demands for information, questions? Yeah. Okay. That'll keep us busy for a little while. Time being 9:30. We're moving right along to public input. Is there anyone here who would like to address the committee at this time?
First, Glenn Diggs, a member of the Board of Selectmen, and usually I don't do this, but I'll speak for the board and say I want to thank all of you for stepping forward. Some cases drafted, but we thank you for coming forward and doing this. And now I'd like to speak more from myself, not as the board, but just as a member of the board. I feel, I've been to the first meeting, I'm at this meeting, and I feel electrified that the amount of information that you've thrown on the table already and the questions are exactly what I had hoped would happen. You brought up the fact of towns are not the same. It is virtually impossible to find another town that is exactly like Chelmsford. You talk about the amount of money we get for schools versus other towns, what they get for schools, or what they get for a particular this from the state, or that particular program from the state. That all affects the ability of the town to pay its bills in one form or another. And that's part of the classification issue. You know, someone, it was brought up early when this was proposed to be a non-binding referendum, that the idea of that was to get to first base. You can't get to second base, which is what this is, I felt, unless you do it in the proper way, and that is enlightenment. That, you know, a lot of people argued that the ballot question was too simplified for most people. If you give them a choice of having higher taxes or lower taxes, they're going to pick the lower taxes. But what is really important is the knowledge of why you're doing it, and are you doing it for the right reasons. And that's what this is all about. To find out what is the reasons, what is the actual picture. When you talk about this comes before the Board of Selectmen every year, and has for a long time, when the Board of Selectmen gets it, and I'm speaking for myself, I'm looking at the issue from 50,000 feet, looking down on it. I need to know, and I feel other members of the board need to know what it looks like at 50 feet. That's what I feel your objective should be, to be closer to the situation, to see all the variables that you can find. And I believe you won't be able to find all of them, but find a lot more and how they relate to one another to try to come up and make some sense of what is a simple statement, split rate or not split rate, but how it affects every person in Chelmsford, because this is one of the most important decisions that will come out of the town every year. It affects every taxpayer in the town, whether they're a business or they're a resident. This will affect their situation, one way or another. That there will be winners and there will be losers based on what you do. You know, one of the things you brought up was that the small business exemption, $1 million, 10 employees. Well, in 2004, I asked one of the members of the board, who's a financial analyst, what was $1 million in 2004? And if you had the same parity of looking at it, $1 million now is like anywhere from $1.3 million to $1.5 million. So should the rule have been changed by the state in terms of looking at a business exemption, that to qualify you should have $1.5 million today, and you could have 15 employees. But they didn't change it. It's like many of the mandates they come out with. They make the mandate now, but what happens in the future? They don't amend that mandate. And it's the same is true on the other 9 residential exemptions of one type or another. In 2004, they represented X. Okay, what do they represent to an average Chelmsford taxpayer in 2018? The rules, for the most part, haven't changed. And so that means that instead of, and I tried to envision what the people who put this law together were thinking when they did it. So you have a group of people like you have here. They have different opinions. They have to come up with a consensus. And maybe that they added these exemptions to try to even out and get everybody to come up and support a common law. That someone wanted residential for this, someone wanted veterans benefit for this, someone wanted this over here. And it all made it into the final 2004 Act, but it hasn't changed. But what has changed is the taxes and the cost of living and what the value of money is today versus what it was then. And that's all what you have to take into consideration, because what, in the end, the Board of Selectmen is entrusted with is, are all of these variables that we can use as far as residential enhancements to make people more fair in paying their taxes, or the only way we really can do it is what I consider is the nuclear approach, and that is we just split the tax rate, period. Done and simple. Or are these other variables out there worthwhile, and we should publicize them more so that people could take advantage of them and make more people happy, and more people happy means a more fair solution for everyone. All right? I've heard it argued that one of the ways that splitting the tax rate could increase economic development is, well, let's say you have someone out there who owns a building, and they're making X amount of profit on the building, and they're happy with it. But you increase the taxes, all of a sudden, they're making this much profit, now they're making this much profit. Well, maybe there's somebody out there who has a better business plan, who comes in and says, you know what? I'll buy that property because I can put that there, and that's gonna make more money because I got a bigger plan, all right? And maybe it works, maybe it doesn't work. I don't have the crystal ball, and I don't think anyone has that crystal ball. But we're hoping that examining all these topics, you're getting closer to the ground level where we need to see, all right? And there are 9 of you focusing on this for a year. The Board of Selectmen, it comes up every year. We don't have the time to spend on it. And it's such an important decision, it needs to be spent on. You know, when you talk about people coming in, one of the people I talked to 2 people who were former economic directors, talking about whether or not split tax rates affect things, whatnot. One person was the economic director for Billerica, and one is the economic development for Nashua, who was the economic development director of Marlborough. Marlborough being a town that was very much like Chelmsford. In about 2004, they had very little economic development, and one of the great success stories. Both of those people work for Peter Milano, who is in charge of the state's kind of economic development. He's someone you may want to bring in who sees across all the towns and may want to talk to them about what this has effect on changing the climate. You also might consider bringing in someone, and they may not come, but someone from Kronos, because here's someone who was in town, had no split tax rate, and moved to a town that has a 1.75 tax rate. How did it affect things? Because the bottom line from the business community is, are we going to drive people out of town? If you drive people out of town, even the residents who are getting some advantage from tax relief, they're going to pay in the end because there'll be no business in town. So it's a double-edged sword for everyone. I thank all of you for being here. I think it's headed in the right direction. I had hoped that it would be lively, and it's proved more than that. And I look forward to all your future meetings. Thank you.
Thank you, Glenn.
Thank you.
Anyone else?
Hi, Ken LaFave, Board of Selectmen member. And just to give you guys a little insight, part of the reason why I supported the committee and what I was hoping to get out of it was, you know, last year when it came time for us to vote, I had been in office just about 6 months. And over that 6-month period, I had learned about economic development and how a planning board works and, you know, how the zoning board of appeals works, and just inundated with information. And then along comes this vote we're expected to make. So I started doing all my own research. And again, like Glenn said, it was the 50,000 foot level sort of research. So what I'm hoping to get out of it is detailed numbers, hard facts, and just all of the information we need to make the right decision for the town when we approach next November, if that helps. Thanks.
Yeah, thank you.
Thank you.
Okay. Let's talk about action items. I have a couple of different things that are relatively related. An outline, a report, a list of objectives, perhaps guiding principles. I think that's something everybody can work on for the next meeting. I think what I'm kind of aiming at is just come to the meeting with an understanding of what you'd like to see as a final product of the committee. I mean, we know it's going to be a report, but what kind of sections are going to be in the report? What sorts of history do we want? What sorts of data or information do we want? Are we going to have a section where we talk explicitly about what our objectives as a committee are, or some other way of discussing how do you make a decision given the data that we put forward? I need to find out if we can televise on Tuesdays, if we're talking about moving the meeting days. Frank, can you provide us with a short summary of the way you go about valuing properties? And I think that will probably go more or less verbatim into the final report, at least as an appendix. Also, the old reports, the 2004 and 2000, is the 2005 report online?
And there's a 1995, but
I
I don't think that'll be particularly.
Yeah, I haven't been able to dig up either the 2004 or the 1995. You have the 95? Okay. Maybe just for historical. I'm going to reach out to the Economic Development Committee about probably a number of things. At some point, I think we'll want to hear from them. Also, if they've looked at stuff like this, if there's some overlap there, again, we don't want to have to reinvent the wheel. Commercial real estate broker, residential real estate broker. Does anybody have somebody they can reach out to? Somebody who might be interested in coming in and talking to us?
I can reach out for both. I know.
I'll ask the EDC about it as well. They may have somebody they've worked with in the past. But yeah, I guess if you would reach out, if anybody else knows somebody they think might want to come and talk, find out if they can make a Monday night. Tom, you were also going to reach out to Leominster?
Yep.
Was that it?
Yeah, I'll
Okay.
reach out to Leominster and Fitchburg.
Somebody from the DOR. Did a name surface later in the discussion? Somebody to talk to from DOR about kind of the progress or changes that have occurred since that last report in 2004?
We can look into it.
Yeah, I mean, I don't mind making a phone call to arrange things, but I wouldn't know who to reach out to, really.
Yeah, I'll reach out.
John, do you want to talk to somebody at the CHA?
Sure.
And see if they would either have, they can come and talk, or they can just submit a report if they think there's interesting or useful information we ought to have. Sheila, I have you down here next to a vague note about tax info. Do you remember that?
I'm going to ask the FinCom if there's a tax professional.
Oh, that's what it is, yeah, FinCom. All right, John, you're gonna continue with the spreadsheet. People liked what they saw, and we'll go on from there. And you and I will also compare and contrast the this adoption and abandonment of split rates. Frank, one more thing: the commercial vacancy rate and that EDC report. If you think it's of interest to the committee, All right, and that is pretty much everything I have. Did I overlook anything?
Will you be inviting Paul Cohen at some point?
Oh, yeah, Paul Cohen. All right, I will reach out to him.
And for what purpose?
Well, just to have his viewpoint as to how,
It could be done as a written statement, possibly. I think
Certainly.
it goes
I just
to
think we need
Evan's point about what kind of, principles or considerations do we want to have, and I think it's of some interest what the town manager thinks. Is there something that he looks at? Is there something that he thinks is particularly important? Okay, anything else?
Next meeting is when? I'm sorry. Next meeting date is,
I am gonna I'll book this room for July 2nd, and we will go from there.
and should we think about a September date for an open session?
I think, yeah, that's on the list of things to kind of just keep in the back of our heads, but yeah, I like the idea of September as opposed to sometime in the summer.
Can we start advertising it on Facebook and just
Well,
just
we
saying
need,
that
I know,
at
but
the meeting.
we can say it, but it's gonna be vague because we don't have a location yet. I guess that's something else we ought to think about. This room might be big enough, or we might wanna go somewhere bigger. The police station, the senior center. I mean, I guess it depends on what kind of turnout we think we're gonna get.
I think more what I was meaning was if we start from now saying that we really are a committee and we are formed, because I'm not sure everybody realizes that. And that we're going to get input, and it's gonna be sometime in September, stay tuned. Just a thought, you might get more of a,
Yeah.
an audience that way that might help in whatever we decide.
We could have just a sign on social media somehow,
Yeah, that's what I mean.
just so that the information would be out there. People know that we're working on something and that we would like their input later in the year.
What do you wanna do?
That's-
I'm open to
Right,
suggestions.
Well, actually, and then another thought process could be is there any way that they could give us input now through,
Well, I think that's
do you
the
not wanna
question.
do that?
Well, I don't, look, public input is always appropriate for a public body. The question is, do we want to do it by ones and twos every week, or is it better to do it all at once when we might get people kind of playing off each other a little bit? I'm certainly happy, anybody who wants to show up here at 9 o'clock can come and talk to us.
right, or
Um,
they could email you.
Or they can email us.
Yeah.
Maybe we should just put when our next meeting is, and maybe just say the room and it's out there. I don't know.
Where, I'm not trying to be snarky, but where do you want to say that? Because there is a town website
Right, there
that
is.
says
You're
that.
right.
But I know
people
it's
don't
not,
go to the
I
town
agree, and that's why I'm not trying to be dismissive. Do you have where would you put that information?
Put it on Facebook, on the town
website.
the town website.
You know what, I would say that would be appropriate for every member of the committee to do. Many of you probably have better social networks than I do. I mean, that's not a point of deliberation.
I think it should
I
be on the
didn't-
town website.
It is on the town
is.
website.
But highlighted.
But you can,
Is it
well,
highlighted?
you can, I think
No,
that's what
people
Helen's
don't
saying.
see
You can put a link to it on your Facebook account, right? Just do a Facebook post that says, we're having a meeting.
By the time I've done that,
Next
the
Tuesday.
selectmen have done the taxes for 2025.
Well, so you really don't think that we should try to solicit information prior to the open meeting, open session in September?
I'm happy to do that. I just, how? Like, what,
Well, is there a site people could go to enlist their opinions, I want the community to feel that they're part of this.
Right.
That's my bottom line. That's the reason I'm saying this. And if it gets out there more, more people understand that we're soliciting their information, their ideas, their thoughts. I don't want anybody to say, well, they didn't listen to me. That's just.
I think that's fair. That gains us nothing. Do you want to put a post on Tom Cristiano's site on Facebook?
That's fine. I'm really not familiar as to what's on the town website. Like when you go to the town of Chelmsford, is
Oh,
there
it's
something
pretty, I mean,
highlighted?
it's the location of the meeting, the date of the meeting, and the
Okay.
agenda. So it's
Oh.
not as informative. It's not really a place to have a back and forth.
All right, I'll talk to Tom. That's
Okay.
fine, yeah.
So July 2nd will be the next one.
Okay,
And,
will do.
yeah, I mean, again, I'm happy to do that sort of thing.
Unless
and
anybody
this is where
feels-
I don't think, no, I don't think that's necessarily something that should run through the chair. I think the more people we get involved in that, the better we are, the better coverage we have. But I'll think about.
When we had the Charter Review Committee,
Mhm.
we went to the town website. We developed our own, whatever you call it.
Oh, yeah.
With
Oh, the site itself?
with a document for people to fill out and to come here
Okay.
And every week we had, or every 2 weeks or whatever it was, we had open microphone for public input.
Mm-hmm.
How many did we get?
No, yeah, you're right. It
None.
wasn't that successful.
No.
You
but
can,
we keep-
right, you
There's a
can,
difference.
you want to make sure there's an open door,
This,
but,
this is hitting people in their pocketbook.
Mhm.
That may be the difference.
Right. yeah. So I mean, we will keep public input on each and every agenda. We'll have, we'll make sure we have at least one one meeting that's dedicated to public input. And yeah, if there's other things we can do in the interim to make people feel welcome, we should.
Should we have the public input at the beginning of the session, so that if anybody does come, they can come in, speak, leave?
Mary and I talked about that a little bit. One of the complaints that we used to get on the school committee was if you have public input at the beginning of the session, people don't have a chance to respond to what's presented during the session. It's, you know, let's leave it like this and see what we get. And if we get feedback that says that isn't working, then we can move it to the beginning of the agenda.
Okay.
All right, this is where we make up a lot of.
If we can
Oh,
cycle
sorry.
back to action items for
Sure,
just a
sure,
second. I'm sure Frank would do it anyway, but I didn't remember hearing it on your list, so he might as well get credit for it. He was going to collect some more, he was going to provide us with some more historical data, going back further with respect to the
Yeah.
historical data on the split tax rate in the
Oh, I thought,
levies.
that's just gonna, that's in the old reports, right? Do you want something besides what's in there?
I
or-
want something I want consolidated. I want, whatever the 1984
Yeah,
through
right,
2018,
right.
all in one place.
Okay. One last thing, so we don't have anybody set up to present for the next meeting. Is there any, we can try to get something set up, or is there interest instead in walking through the exemptions? And I think we'd have, frankly, that discussion again, that are laid out in here with an eye to what's been implemented by Chelmsford already. Or is that something we want to put off for a little while?
If we have time, we might as well do it.
All right, if I can find somebody who will come and talk, maybe we'll do that first, because I feel like the exemptions we can do anytime,
Yeah,
but
we can do them anytime.
if not, we can put them on the agenda and we'll take a look at it. Okay. All right, as I was saying, now we make up the time. Any press questions? No, moving right along. The time being 9:56.
Move to
I
adjourn.
would entertain a motion to
Move to
adjourn.
Second.
All in favor?
Aye.
Any opposed? 8-0. Thank you very much.